In the night, so cold rocket dreams, resilience in the fold. Hedge pressurizing, the charts are bold. DD bands rapping, stories untold. Riding with rockets through the AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Riding with rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Ascending, mind on fire, never ending. Trees of gold, endless fight. Push on through the endless night. Riding with a rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with their AI. Up we go, reaching for the sky. Every train home never dies. On the night glory. Sanctuary in awe, it's blending. Mind on fire, never ending. Dreams of gold, let's fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
Hello, friends. Good morning. Somebody says Matt constantly improves his trading. First thing I saw. Thank you, thank you. We are on a lucky streak here. It's been going pretty well. All right. What's up? Good morning. Talking out loud. Simon Dean Fraser, Sean Duncan, Bearing Bulls, Berman Fraser. Let's hit the like button. Yes, hit the like button, you guys. Rocket Scooter. Yeah. We are getting ready to get started. Looks like we've been moving up all night. Craziness. We had like Japan tariff stuff moving the market. We got CPI, I think, today moving the market, pre-market. I just kind of like slept through all of this. Didn't really do much, and we'll tackle the market today when we get here. How are you guys doing? I think we are breaking all-time highs yet again. Very cool, very cool. All right, futures. What's up, Future Forever? What's up, Julian? Happy Tuesday. Mark Landers, Ghostly, Lee Media, Blue Kim, Tagga Gaming, Aid, Cal. All right, hold on. Glasses on. I gotta read this. It's so crazy because, like, you know, if you guys, from my point of view, it just looks like you see me. That's it. From my point of view, it's like cameras, lights, everything glares. Tiny text, big text, little platform. It's like huge workstation here. Glasses always gotta come on because I can't read this tiny little text over here. I got a microphone in front of my face. My the microphone is here. My arm has to go under the microphone on this side and over the microphone on this side, and so I'm kind of like, I have to like enter, like it's like a cockpit in a fighter jet. I'm kind of stuck in the same spot. It's interesting dynamics, what you guys don't see on the other side of the streamer. Everyone has the same kind of thing. You got all kind of gear in front of you. I have to navigate, doing my normal job, all that stuff. So now glasses on so I can read right here. Good morning, everybody. Hit the like button really quick. We're gonna do a giveaway like we do every day this month. 1,000 viewers, straight to fight, straight to final. We get to 1,500. We'll do two. And other giveaways. Obviously, we do giveaways every day. The more you guys spam, the better the crown you get. Really, you guys competing for the #1 crown. Simon Dean, guess the #1 crown looks like. Looking crazy in chat. What's up, Iceball? Good morning. Just right, slightly fatter, Matt. That was a hilarious video you guys made. That's hilarious. Bruce, what's up? Rocky Mountain Trader, Anaya, what's up? Benny Noman, Dominic James, Sam, Dodge Sean. What's up? What's up? Tones Trades, what's up? Good morning. Nathan Out of Time, Morris, Squish, Kiter. What's up, Kiter? It's been a while, dude. Good to see you, man. Frank, Piper, Happy, Poro, Saint 909, Jabbar, Oxense, and wait, I lost the chat. Everybody go, and everybody else. Good morning. Let's read the morning comments here. B-Boy Mario, RSC Elite Trader, buying all-time high. Seems hard work. Yeah, right? Does seem like a lot. Engaging more in live chat can earn you a crown. Looks like that. It's like a new YouTube thing. I didn't change anything on the channel. Let's do a new YouTube thing. What's up, Sofa FX? What's up, man? Matt crushing it. Thank you. Michael, Beavis, Gold Tilt. Last time we were looking at 2300 HP. Could take a stab there. Locked away for 5 seconds and it rockets. Right? The luck or the not luck. What's up, Lee Media? E-mini S&P not showing a rock suitor? Make sure you're typing it in right. EF.US.EPU25. Go to the table at the bottom of the platform. The risk interval DD table will tell you the actual tickers to use. All right. What else? Good morning, guys. Welcome to the stream. About to get some trading going on here. Mario. Here, keep an eye on the video. Yep, gonna watch that today. Donnie Wan, Sean, Fox, and the rest. Everyone down here. Sire, Rich, V. Gabor. Good morning, Rich, Mario. Anaya. Good morning. Pro student here. Oh, awesome, man. Welcome to the crew. T6. Good morning. Do you have any new songs for us today? Market at all-time highs after CPI. It's kind of like we have like a songs narrating real time now. The rate at which you guys pump them out. It's like a real time soundtrack. Matt's walking down the street. He looks to the right. There's a Starbucks. That's as quick as they're coming out. That like real time. It's like that movie with Will Ferrell where the narrator is like narrating his life as he's living it. He brushes his teeth 14 times. He's like, what's going on? Dave's Mac Rich. Good morning. T6 everybody. Have one in the chamber crushing it. Killer, dude. Love it. All right. Michael, what's up, everybody else? Good morning. Let's go. On the roll. You ready to get going? All right. I ain't touching any of this just yet. Let's see what we got. We got good morning, team. Good morning, everybody else. Good morning to all of you, and welcome. Let's get ready to get started. First thing I do is market my dynamics. Make sure I got them correct. 62.87 check, 63.02. 97, so let's just do 63.02 right here, and then I just don't need that top one there. We're gonna open somewhere over here. We close somewhere over here, so I'm marking them open and close. By the way, if you guys haven't seen on the test server, the dynamic overnight conversions, we have the prototype done for hedge pressure, monthly hedge pressure. It updates every 5 seconds. We haven't incorporated the algo that updates it like dynamically, which is to update it as a as price gets close to the level, to update certain ones faster, so that way they're not all updating, but we might just have them update every 5 seconds. It's not that visually different. But anyways, we're working on it right now, and should be, so the prototype looks good, calculation looks good. It's pretty good. So all this conversion that you see here, this is what we're automating right now for you guys. So also let me let him know it really quick. Also, I'm taking a note for developers right now. Woo! Doesn't have to convert. Yeah. Oh, righty. Let's take a look what we got here. Where's my notes? Got all these notes. There we go. All right. Close above, close below. I'm on a 15-day winning streak. I'm up like 180, 190 something thousand. Trade of 5. Working on that guy. I'm up close to maybe, I don't know, $10,000 this month, something like that. With my, or maybe, I don't know if it's 10, maybe 8, 9. With my funded futures live account, I'm up, I don't know, equivalent. I don't know how much I've done this much in funded X, but we calculated yesterday on the stream. that I've done $60,000 this month so far. Profit plus payouts. So not bad start to July, 15-day streak. It's been killer. It's been fun. Liking it. So supporting hedge pressures and monthlies today is looking solid. But man, we have just like a killer month. This bull market has been such a blessing. And a lot of times bull market trading is not as easy as you think. A lot of times bull market trading is you just got to trust that the bull market is there. You're jumping in on a trade at the open a lot of the times, which is what I'm doing a lot of the times. I don't know what you guys are doing, but almost every trade in the last kind of like 3 weeks, I've just been jumping in at the open because all the data looks good. And then, you know, maybe 1 out of 2 days it dips against me pretty hard and I take a loss, and then I work my way back by the end of the day, continuing the long. Bull markets are usually like that. They're not just like, here you go, guys, and the market moves up a little bit, hit, it's going up for the rest of the day, and you jump in and get a big ride. Not usually like that. Usually the market gaps up. You got to trust that it keeps going. You either sit out and miss the run, or you get in, you take a little loss, grab your high volume pivots, long back up. I've worked all my accounts back to positive every day for the last 15 days, which is almost, 20 days in a trading month, which is literally almost a month of no losing, no losses. So lucky for me. Again, winning streaks aren't a real thing. Streaks aren't real. It's all in your head. Don't get it caught up in your head that you have a streak. That'll ruin your trading. You'll think about it. You'll try to keep it going. The psychology will let you think about it. It's kind of like whenever you're shooting free throws, you made like 10 in a row. Don't go up there and shoot the next one and be like, oh, I made 10 in a row. I'm going to make this next one. Because if you miss the next one, it'll like mess up your game. And then all of a sudden you'll miss the next one and miss the next one. And then it's in your head. You're like, wait, I'm on a streak. I can't miss. And you're going to be sloppy. So just remember, there's no such thing as a winning streak, a losing streak. It's all in your head. They're independent events that are not tied together. They don't remember each other. And therefore, don't get in your head to try to remember either. Streaks are fun for marketing, I guess. Looks cool. Sounds cool. But at the end of the day, you got to go on like every day, like the previous 15 days didn't happen. It's just cool to know I haven't lost in 15 days. But other than that, who cares? Don't mean anything. Hot hand fallacy. Somebody said, there you go. Simon D nailed it. It's exactly what it's called. It's fallacy to believe that independent events have some kind of tie to each other. There's some kind of hysteresis in data, which is like residual leftovers is a way we said it in chemistry. Hysteresis is best described as, let's say that you have a beaker and you mix two things together and it makes a third thing. And then you go, okay, that was cool for my experiment. And then you just like barely rinse it out. You don't even wash it. You just kind of rinse it out and dump it, put the beaker up. There's still some shit left in the beaker, right? Like residue. And so your next experiment, the results are kind of tainted because it has extra stuff in it that it wasn't supposed to have, because you didn't clean it out good enough. And then your results are different, and then different the more you don't clean your supplies. So you start to affect the results by not fully resetting your experiment, right? So in trading, you must fully reset your experiment, your brain up here. Reset it. It doesn't matter what you did before. None of it matters. You might have been on a losing streak. Don't let that get in your head either. That's the worst part. It's weird saying I'm on a winning streak, and that's like the hardest thing I have to deal with in life. Because it is. It's just as bad as being on a losing streak. You feel like you're in a rut, and it just gets in your head psychologically. What you have to do is reset every day. Watch that brain beaker out, baby. No bias, no nothing. Every day is a fresh day. And, but it just, it's nice to know that the statistics have played out. And this is one thing I do have to say about having such good performance, at least lately. It's just because statistics play out very well in a bull market. 90% works, 80% works, that much time. There's not a lot of problems, not a lot of crazy irrational markets, crazy volatility. Markets nice and clean and stable. And the odds seem to realize a whole lot better in bull markets because you're not really, you don't have a lot of events pushing the market away from you. And so due to this, it's pretty easy to understand that bear markets give you a lot more opportunities. The volatility will take you to all kind of places, liquidity pockets, DD bands. We haven't touched DD bands, I don't know, in like 2 months, right? It's not even been a thing, the bottom band. It's one of my favorite setups. We haven't even gotten it. The market's just been up and up and up and up. As you might notice, bull markets sometimes are harder to trade than bear markets because it requires you to sit on a trade for longer. It requires you to long at the open, usually long at the high. We had a catalyst A and now a catalyst B. or an event A, event B, and the market could rally from here. You know, your first inclination should be like, oh man, it's moved up. I should probably short this, right? And instead, you learn from me is that everything pre-market, you forget about the moment the market opens. Markets open as spot of max liquidity. That's where they gap to. That's the whole MOO process. Let's find liquidity. Liquidity is a reset button. Speaking of reset buttons and streaks and all that, guys, hit the like button if you don't mind. Give me some love there on the YouTube algo. We hit 500 likes. That's what triggers step 1 of the giveaway stuff. In the meantime, you guys know the rule because we have a song that reminds you.
Hit the like button. Rocket scooter. Yeah, yeah, yeah.
Now,
Rocket scooter. Yeah, yeah, yeah. Hit the like button.
the idea in a bear market is that market usually opens and flip-flops all over the place. You usually just wait. Bear markets, you're not like, okay, let me jump in at the open. Bear markets are like, let me just wait. Wherever I want it to go, it's going to go there. Why? Because the market's volatile. Volatile markets just travel all over the place. Whatever pivot I want, it's probably going to hit it at some point today. Let me just chill on it. That's my philosophy in bear markets. Wherever I want it, wherever I want, I'll get it. Oh, there's a 200-point pivot lower. All right, I'll get it. So I always tell myself, in a bear market, whatever I want, I'm going to get. This market's volatile enough; it's likely to go anywhere. You know, tweet comes out, tweet comes out. You're going to hit all your pivots. And bull market's not the same. Bull market's going to like inch along, and then maybe 3 or 4 hours later, you might get a dip that you got to rush in on, that you're not paying attention. You'll miss it. Bear markets are a lot of quick in, quick out. You'll get your pivot. You can trade both sides a lot of the time. Bull market is just like, well, let me get in at the high and hopefully it keeps going higher. And you realize it might do that for like 6 months without even coming down. Don't ever think, okay, we're at all-time highs. Maybe it should come down. Maybe it should short it. It's about time. You're never going to know when people are done buying. Don't ever try to guess either. People are buying as long as they're buying. And usually at the top, it's people that were short that are upside down that are continuing to buy to cover their short. So last thing you ever do is try to guess the top in a bull market. So what I do is I long and long and long and long and long and long, 15-day streak, 16-day streak. One time I went on a 70-day streak on the stream. And then one day it hits me for a 10K or 20K loss. Big fucking whoop. I made $250,000 on the way up. This is the point. Never wake up and say, okay, today's the day I'm going to short this market. If it's the sell-off day, I'll take my loss, right? It'll break through hedge pressure, break through monthly hedge, crash out. Everyone's devastated. Market's reporting 3% drop in the S&P, blah, blah, blah. Okay. And then blow up the accounts. But the streak is over and I took the loss. I'm never like, okay, I'm a little nervous. Let me short this market. Right? Just remember, trade what is. When the market's on a 100-day streak, months and months and months and months and going up, still don't try to guess when the end is. Today could be the end, right? But the one thing you don't want to do is be the person who's shorting at the bottom. And it may be hard to realize this because it's the all-time highs. But from somebody else's perspective in time, this is actually a bottom. Never know. We don't ever know if this is where we're going on the short squeeze over the next 6 months. We don't know if we're going to do this over the next couple of weeks, and then this, and then this, and then this, and you never know. So I don't see this and say, well, time to die, right? I see this and go, time to go. Just like every day, time to long, time to long, time to long. There will be a day when it dumps and breaks pivots, and that's a losing day. But I will never be more than a day late to a bear party. But I'll never be the first bear at the party, because the first bear at the party is a fucking loser. Who wants to be the first person at a party? Not me. Only weirdos show up first. Or unless you got kids. If you got kids, then you're not a weirdo, because you gotta get home to the kids, so you usually go to the party early. You're excused. Or if you got cats or dogs or something, I get it. But if you show up to the party by yourself, you're the first person there, you're kind of the weirdo. Hey guys, time to party. And everybody's still like, yo bro, we're still setting up. Just kind of chill for a little bit. You want to show up casually late to a bear party. First of all, the winning party is the bull party. Markets always go up. And the bull party is the winning party. The bear party is the loser party all by itself anyways. It's a party for weirdos. Nobody wants markets to crash. Maybe some of you do. Nobody really wants it though. We love to fucking bull party to keep going up forever, right? So why don't we show up to the weirdo party and be first one there? You know what I'm saying? Just let everybody, be at a bull party and then be like, oh crap, this is a bear party. Well, I got a bear costume in the car. Let me go get it real quick. I'll join you guys. This party looks fun. You guys are playing Catan over here. You guys are playing Switch. This is kind of a nerdy party. I'm kind of nerdy. I like these things. All right, I'll join you guys. Hold on, I got a bear costume in the car. I'll go get it real quick. And then you show up and you're like, all right, cool. I'll join the bears. Let's go. But you weren't like the person that shows up to like a raging kegger, like, you know, hey guys, who wants to play Nintendo? And everyone's like, oh, wait, what? Although I'd be that guy though, not gonna lie. I'd probably be the person. My friends and I parties are, speaking of that, we were playing Mario Kart at my last party. So, you know, jokes aside, don't be the first person to a bear party. There's no glory in shorting against the bull market. Just the market will crash. We'll know. We teach you the monthly match trick to know that we're on the other side of the bull market, and that's it. Could today sell off? Yeah, today could be the day we sell off, right? The more you show up early, the more you're going to have heartburn. And then the day that it does sell off, you're going to miss out because you're scared of how many money left. So what I usually do is, yeah, the very first nasty sell-off day I miss, we come back the next day and I say, was it bad enough to turn this market bearish or waving down? Okay, cool. Bull party, LOL. The bull party is the cool party, right? And the market just inches higher with no effort. There's no volatility. You just ape into the high like an idiot and then prints money. And then you realize, you know, 60 days later, it's still doing the same thing. And you're like, when's it going to end? And then it just keeps going and going and going. And nobody calls the cops on a bull party, you know, like nobody breaks it up. It's kind of a fun party for winners. But anyways, I like the analogy. Thank you. Thank you. You feel attacked, LOL. So anyways, I'm just saying, be careful. Don't ever believe like, or think like, oh, it's at highs, I got to short this. I'm just like, okay, where's my long? Maybe here, somewhere in here. We're at upper DD band, by the way. So let me go ahead and just like, you know, just like chill on this one. But again, markets are going to do what they're going to do. And there's a reason they go up, and not saying that I'm perma bull, but I'm just perma read the market. Whatever the party is, I'm going to go to that party, and party would be the last person there. And then when I can see everybody coming in, and all the bears are there, I'll just go get my bear costume out of the car. But I don't want to be like, you know, all the bulls are partying, having a good time. Actually, guys, the dynamics of the inflation is, and everybody's gonna be like, who invited like Poindexter? Get this kid out of here. He's ruining our buzz, right? So I'm not saying you guys, I'm not trying to attack you for trying to short the market. Don't take that as that. It's probably a good trade. Probably always a good trade. The thing I'm saying is that in general, there's a feeling that people have is they're afraid of the market because it's at highs. Never afraid of the market at high. A high today is always a low tomorrow, and always a low 10 years from now. It's always a low 1 year from now. The high today, the all-time high today is always your grandkids' all-time low in their lifetime. This is kind of the thing. Markets will continue to move, and the market needs something to bring it down. Look like we had CPI today, right? I haven't even read the news yet. Let's talk about it. I thought we'd come in closer to a 2.8. That was my estimate. And I was even off of that. So I knew that we would come in, and you guys remember yesterday I gave you the speech that I thought 2.6 as a forecast was very low. I said, we're probably going to come in closer to a 2.8, maybe a 3. I was right that we'd come in a little higher, right? So that was a good call, but obviously it didn't come in that much higher. Hold on one second. But it looks like we didn't get a big bump up on CPI. 2.7 is kind of normal, and 2.9 actually came in on the core a little bit lower. I was actually curious to see what core did different, and it looks like the inflation is still buried up in food and energy. So neat to see that data came through. Pretty interesting. And the market responded pretty bullish to that. Maybe because of this. This is still low. It's increasing off the previous, obviously due to the tariffs. So it looks like Wall Street still don't even care about the inflation anymore. So it is what it is. Good deal. Good deal. All right. Good morning, guys. Don't forget to hit the like button. We are about ready to roll. 10 minutes to the market opens. We almost have 1,000 people in here. Oh, iDoc. Thank you really quick. Hold on. iDoc bought me a present. Oh. Let's see what we got. What is the bracelet? What the heck? What else is under my door? Hold on. She brought me this suspiciously wrapped package under my door, which is like something wrapped up. Oh, toilet paper. I'm like, what kind of sketch thing is this? Is the music? Can you guys hear the music? I somehow can't hear music. There we go. It's actually one of my things I wear on my arm that broke at the party that we threw. She's like, I thought this was your medicine. I was like, what kind of, oops, like what kind of a, he's like, I thought this was your pills. I'm like, you know, who has their, thank you. Oh, thank you so much. I'm like, who wraps their drugs up in a piece of toilet paper? How very like, you know, dropping me off like drugs in a little baggie or something. It's my blood pressure meds. Yeah, I was wondering what this was. Pregnancy test? No, not yet. One day. This is just a bunch of plastic beads. Just me, I was like, I need my meds. Hold it. Let's go. I got my own delivery service, I guess. Thank you, iDoc. Appreciate it. It's a blue. She dropped my blue chews off under the door. Yeah, pretty much. 23,200 at the open today. That's crazy. Plan B. Why for me though? You know. She making me take the plan B? All right. It's a little bootleg delivery service. Here's your stuff wrapped up in toilet paper. What, are we trying to sneak it into a concert or something? You know what I mean? You guys have all been there. I know you've all been there. Putting your tab in your shoe to go to a music festival. They check you at the door. Come on. We know you all been there. Wow, these are my vitamins, officer. Okay. She's making me be the mule. Jokes aside, guys, we're living a clean lifestyle. I'm not doing coffee anymore. I'm not doing energy drinks anymore. I'm watching my blood pressure, cholesterol. I'm trying to get healthy this year. Super healthy. Matt slaved over building a trading platform and a marketplace and building a brand over the last year. Now I do the clean stuff. Green juice. Oh, I forgot to get my green juice. Oh well, maybe later. Market pushing up at highs. We're opening close to DD band at the top. Holy moly. Market opening in 6 minutes, by the way. Fancy drug dealers wrapping paper. Exactly, right? Have I done any testing using liquidity maps to swing trade? Goose, yeah, we do it for monthly maps. Monthly maps is utilized for swing trading a lot of the times. And of course, monthly hedge pressure and other things. So like an example is you have a big old sell-off day. Today was that day and we're at monthly hedge pressure. I'd enter a position for the long haul and I can use monthly maps to tell me like where I can sell against it, like credit spreads or something. Right. And while monthly maps do update every day you confirm the trade that you're still in, i.e. a bull market. Say that I was bullish since April and the market's going higher and higher and higher on my swing trade. I'm just trailing my stop at monthly hedge pressure because every day the market should hold monthly hedge pressure and keep going. And I would just basically hold the market until we flip flop and go the other way. Right. Market open and sells, maybe, hopefully get something. Hey Matt, just passed an eval today. You knew. Oh, congratulations, man. What I'm afraid of is I won't be able to confident eval during funded. Do you have any tips for this? Well, what I would say is, you know, if you are feeling that way, take a day off and reset before you do anything else. Like usually what a lot of people do is you do all this work, you pass the eval, whew, finally the pressure's off, right? And then you jump into the funded and you mess it up on the first day, right? So don't do that. If you're feeling any sort of way, try to forget, right? Try to forget everything about your eval. Remember, there's no such thing as streaks. There's no such thing as eval. All this is in your head. And if you're feeling like, you know, I might not have the confidence, just put one day in between your passing and your starting the new one. And that's a good way to do it. Just take a day off and just watch and just reset and be like, okay. Even today, we had 2 news events bump the market. We're close to highs. You know, it's maybe a risky day anyways. Let me just kind of like take the day off and reset and come tomorrow like a brand new day. Also, make your first trade your best setup. That's also a good trick, especially with trailing drawdowns. You want to make sure your first trade is your best setup, your highest probable. For me, it's liquidity pockets, monthly hedge pressure taps, CD band taps, things like that. Not like, let me long at the open, short at the open. Let me try to fight with my first account. Like, even if it's like wait a week for that nice little hedge pressure dip or whatever, that's usually helpful too. It's all psychological. Like when you get to the stage that it doesn't matter to you, like for me, I can kind of like forget very quickly. Even after I make a bad trade, I've already forgotten about it. It doesn't affect me. You know, with my every single time philosophy, it doesn't matter if I lose 6 times in a row and that hecklers come and stream and like, oh, this guy sucks and whatever. And it doesn't faze me because I know I don't. And so I'm still attacking it the same way. And that comes with years of practice. Just doesn't matter how many times, you know, you're at war and people are firing bullets at you, you never lose your focus. And that comes from just years of combat hardening, right? And if you kind of still feel like I might, you know, I'm on a good streak, I finally won, I'm kind of nervous, take a day off, even just to take a day off, and then wait for your good setups. Make your first trade your highest probable setup. Even if you got to wait a week to do it, a couple days to do it, you're going to feel good in that funded account and your first trade's winning. It'll set you psychologically for the rest of the life of the account. This is one thing to take note of. You know, your first trade usually sets the pace of how you feel for the rest of them. If your first trade is really bad, you're going to be scared to attack the market because you're already so close to blowing up. So you're going to trade it differently, right? You're not going to like doing that. You shouldn't do that. If your first trade's a win, you're also going to trade differently. So you want to make sure that you maintain your confidence and make your first trade just be your strongest one, right? That usually helps. What's up, guys? Good morning. Good morning. Good morning. Hit the like button. Don't forget, here comes the pop. Yeah, probably, right? Pop before drop. I'd like to see the market at least respond to this with some kind of dippy dip to play with. I'd love to see that. So we'll see if we get anything good. I would say I'm a little excited to see something. This is a day that I'd hate to chase at the open, but again, this could be a day I can just sit out. Sitting out is also sexy. Don't let anyone tell you otherwise. Although on a stream, it may not seem like the sexy thing to do to sit here and just wait and talk and hang out with your friends, but trading is 90% waiting. It really is. 90% waiting, 9% acting, 1% reacting, and 20% confusion, which is why that joke adds up to 120%. Anyways, mostly just chilling. Chilling's cool. There's nothing wrong with chilling. 50-day winning streak. Most of it comes from sitting here doing nothing, believe it or not. What's this guy trade? What's he doing? He's not even trading. Well, I'm winning. Winning a lot of times is waiting. That's what trading is all about. Good morning, everybody. Good morning. Good morning. Love the psychology shot. Massive help. Sure. The starting trade is usually going to set the pace for you, especially with trailing drawdown accounts. You got to be very careful because your first and static accounts, right? You kind of need to lift off and get a buffer as quick as you can to get rid of trailing drawdown and also to get off the static limit and prop account. Your first trade kind of needs to be a banger. And that's really what you're looking to do. Half gap play, probably today. Today might be, if we do fall back to half gap, might be a play on this, right? You guys nailed it. I'm looking forward to seeing something like that. Right now, nothing I did do any trades overnight. I just basically, IDOC and I had steaks. I grilled outside and it was dark and I lost track of time because I was running inside dealing with the mashed potatoes. And while the steaks were beautiful, medium rare, and 10 degrees under when they came out of the oven, when I did the reverse sear, I left it on an extra minute and I accidentally turned a beautiful, and I feel so guilty for the cow who became a medium and my filet became medium well. Oh, that poor cow sacrificed for nothing, but we ate steak anyways. I ruined him. She was eating a ribeye medium, guys. I apologized to her like 100 times last night for it. I was like, babe, I'm never cooking again. It's dark outside. I couldn't even see. I had 1 minute per side on reverse sear. The skillet wasn't hot enough. That was the problem. So that became the thing. And boy, oh boy. And I call him, it was an accident. Oh, she likes it medium rare, at best medium rare. And filet, right? But also I was cooking 2 different steaks at 2 different thicknesses. So it was a little bit of a challenge to do so. But I was outside on my griddle and it didn't get hot enough for I threw the steaks on there. And we were in a hurry because we got home late. We were grocery shopping, whatever. All right, let's get this going here. Get our liquidity maps up. Okay, this is bull long up. This is a long from hedge pressure. This is about 40 points lower on S&P. So it's a long at open play if we do get it. Resiliences are strong enough to do so, or I can just wait and do nothing. And wait for dips. Half gap is the play if we do fall, which looks all right. QQQ, let's see if we got an EST or anything. QQQ has nothing, same play already. So we have monthly hedge pressure and stuff much lower. This is 200 points lower on QQQ. So basically all we have is about half gap today. Half gap is the play. We've got nothing else. So let's see what we get. I could long it open, but here's the thing. Today I'm going to sit out on this. There's no reason that the market can't rally up and completely go to the moon today, but we'll see. There is no short setup. All my plays today are going to be redistribution zone plays off of res. Res is long and strong today, 60 and 70%, which is good, which means opportunistic long traders could essentially take the long from here to DD band, or just wait for half gap, or even wait for gap fill. All of these are good pivots to the long side. Chasing long here is not a bad pivot at all, but I don't know if I want to do it. I'm going to wait long for the stocks and make sure I convince myself things are all right. But certainly not like a short setup day. Now, if the stocks do fall out, which is great, I'm watching NVIDIA today. We do have support in some of the major stocks down in here. So if I see that support, it's going to be all pretty nice and kosher. Let's see what we got here. Apple on the bear side, Apple below MHP, NVIDIA down there, Amazon below MHP. Wow, the stocks might sell off today. Okay. Meta below MHP. Okay, big tech is all below MHP today. Okay, this is selling pressure on the stocks here. Tesla below MHP. All right, today could be the first day of the bear party. All right. Well, all right, everybody, let's get our loser costumes out. No, I'm just kidding. I like making jokes. This could be the sell day. Okay, but the stocks are looking pretty gnarly. Okay. All right. 22,975, 8 plus on Nasdaq, way down here. So Simon, this is, oh yeah, that's the that's our atom bomb, right? And hedge pressure monthly line up at the same spot. Yep. So what Simon is telling you guys, the A plus setup is we have 3 pivots line up: hedge pressure monthly, hedge pressure bull zone. This is the candy today. So if the market decides, if today's the day we sell off, keep note, guys, I'm not taking the long out the door today because every single stock is below MHP. This is not every single stock, every single big name stock in the Mag 7 is below MHP. That's negative gamma. So this could actually probably sell off today. So being very careful out the door. I'm not taking the open long for the first time in like 3 freaking weeks. So everyone understand what I'm saying, right? Look, NVIDIA, although it is bullish, we should be good there. Apple, watch MHPs today. We need to get above it. Apple is finally breaking above it. Amazon's below it. Microsoft's above it. It's below this orange line. Meta's below it. Tesla is below it. Google is above it. So a lot of the stocks are okay, but a lot of the stocks are in negative gamma territory. If you look on the liquidity map, you guys see right below this orange line, this is negative gamma. This is bearish hedging, which means short hedging to chase puts in the money. And so being careful here, I'm not longing at the open because I'm looking at the stocks, all things being equal. Today's the day where I don't get the pressure of the stocks moving. So as you see, I'm sitting out, which is the smart freaking thing to do. And I got anything on the table here, which I do like the idea of that. Today, market probably sell off. Who here made the same judgment call today, this morning? Right? If it's the bull party, remember, I said I'm just not going to do anything at the open. If it's the bear party today, I'm not longing at the top. I'm not shorting it. I'm not doing anything. I'm just watching. How many people here? I want to know what you guys are doing. Are you flat and watching? Are you long and taking the long here? Or are you just chilling? Today's the day I'm chilling. So we're going to wait. This is what a winner does. A winner waits. Right? A winner waits and looks. Let's see. Not all the stocks are kosher and bullish here. And this is looking pretty gnarly to the downside. Waiting and watching, waiting and watching. You guys are short. So nobody here longed at the top. Yeah, dude, we've trained you guys so well. Y'all are so smart. Y'all are, whoever's shorting here, good job to you guys, right? So whoever's flat, good job to you guys. Everybody seems to be doing the same thing. Wasn't good enough to long at the door for me. Why? The opportunity wasn't there, right? We know DD band is 96% of days closed below. And I mean, I'm sitting here at the top. I've got 40 points there with my half gap support roughly almost 100 points lower. There's no reason I'm going to take a, 40 points to lose 100. This doesn't make any sense at all. Too close to the top to touch it. We're going to wait, right? Now here, the market's not bad enough for me to want to do anything. But look, Nasdaq resilience just went negative, and that's likely due to negative gamma hedging on stocks. Negative resilience can fill the gap. And as Simon D pointed out earlier today, which I love, Simon always does, we've got an A quintuple plus setup all nearby each other. And let me show you guys where it is. Oh, again, the market rallies from here and I miss out. I don't care. I'm on a 15-day winning streak. I'm up almost $190,000 profit with Tradeify. I'm not going to go out there and risk it to make a few pennies. My buddy Keith, who's a professional annuities trader, back in the day, one of my first friends that I knew when I was trading, went to high school together. And he's always telling me, he says, you know, there's a rule of thumb that I have as a trader, because he traded you know, fixed income, but also on the side he traded S&P at his personal accounts. And he was like, I had this rule. He said, I don't pick up pennies in front of a steamroller. And it's always stuck with me. And that was his saying. But I always quote it. And basically it means is that, you know, don't continue to juice the last drop out of the lemon after, you know, you've made like 10 cups of lemonade and you're like, let me just make one more. It's like that last, you don't have much to get, but you have a lot to lose. So you're taking a pretty big risk trying to grab the last couple of pennies while the steamroller is about to plow you over, right? Always makes you think of that Austin Powers, the movie where he was like, the steamroller was like 20 feet away and he's like, no. But yeah, so here it's like, these are pennies and this is the steamroller. I'm going to stay out of the way of this one. And even if, again, I correctly may have called, okay, it's not right time to long, but hey, I didn't even get the short. It doesn't even matter. But I'm never the first person to a bear party. Let's watch and see if this turns into a bear party. Let's look at the evidence we have. So far, resiliences are good and NASDAQ is the stronger of the two. So let's focus on NASDAQ today to be the stronger of the two indices. Half gap is always the support that we look to pivot off of when res is greater than 0. Now, because I'm on such a huge hot streak, I don't even really care to do too much. I'm probably going to do micro futures today, just at the half gap, because at this point, I could probably take the gap long back up to there, and let's see what we get. You know, obviously I've had a crushing killer week, you guys. Let me show you guys some of my stats here. This is one thing that's always important when you're watching traders, is to ask them to see their live stats. And a lot of people don't show you the live stats. A lot of people will, let me load it up really good. A lot of people will show you, like, there's a bunch of bullshit ways to show stats. Like, here's my payout. People just like show you their payout. Well, how much did you pay in, right? Like, or somebody shows you the percent gain. That's the worst kind of scam. I made 20% this year off of what? $1? Look, listen, don't let anybody tell you, well, hedge funds are measuring percent gains. Ah, that's bullshit. You're not managing $6 billion. Any yokel could put $100 in a trading account and say they made 300% in a year. Yeah, cold hard cash is all that matters. Percent, win rates, what matters. Expectancy, what matters. Run up to drawdown ratios, what matters. Doesn't matter anything else. Show the stats or don't. But anyways, let me show you my stats. Trying along the Tradeify here. It's taken a million years to log in. So let's see why it's taking a million years to log in. The website's being a little slow today. Well, to be continued, because Tradeify's like spinning wheel. It's not logging in. Let me guys show you my funded futures while you guys are here. This is my funded futures live account, live with these guys. Hold on. All right, cool. So sitting out was the right choice. Lucky me. Okay. Here's my funded futures. I'm on a winning streak with this. I can make this bigger for you guys. Let me just log right in and show you. Let's click report. This month. Yep. And I commit to you guys as y'all watch the stream. Was like, I always commit to showing you guys my results every day. Those shenanigans, this is what they are. Take it or leave it. So my funded futures live account, this is since I started. Looks like we're selling off just really quickly. This is my P&L so far, $8,000 so far in this account. This is from start of July. I am trading close to 60%, which is a little low for me, but it's been, this account was kind of a battle. There's daily loss limit on it. So kind of like you get squeezed out earlier. It's not really my trading style, but it is what it is. You expect to see pretty good, almost $200. And then my run up to drawdown is 85 to 2, which is roughly 4.5 to 1, or 4.25 to 1, which again, those stats are great. Go back and rewind the video if you want to watch it. Let's get back to watching the trades here. Over 1,000 viewers. Dang, 1,100 viewers. This is the biggest stream we've ever had. 1121. Record breaking, guys. Thank you. All right. We'll be doing a giveaway in just a little bit as soon as we get close to that. And Tradeify is still not logging in. I don't know what's going on. Well, we'll see what happens. All right, there's a half gap trade. We can grab some micros there if res is greater than 0, but S&P res is negative. So let's sit out on this too. Let's let the gap fill. And this is a great judgment call. And again, you might say, Matt, why aren't you shorting? Because I don't short in a bull market. I instead let it fall and find my good quality pivots at the bottom. Let's see where they are. Simon Dean, you nailed it. This is what I'm looking for. We got double A plus and A pluses all day long. This is maybe where it can bounce and keep going. This is, maybe I'll take a stab with some micros there. But the real juice today is 622.5 in bull zone and bear zone. We know right inside of here, guys, this is my 20K day if I get all of that. If I get that dip, you guys know how I trade, right? Only A plus setups today. Yeah, fuck the B stuff, right? You guys, yeah, you nailed it. 100%. Red candles, I'm with you, dude. All right. All right, so that's cool. So we got MHP 622.5, which is roughly 40 points lower on S&P. That's a pretty big drop. I don't know if we get it. Market's pretty bullish. But if we got it, oh, that'd be great, right? From here, we've got basically quadruple A plus. We've got or A plus, and A plus, all down inside of here. This is great. I have hedge pressure, monthly hedge pressure, bull zone bottom, like lining up the same place. If the market breaks this is the first day of the bear party. So remember, this is where the bear party is down in here, and this is where the bull party continues. So if we get lucky, or if I get lucky, you know, I'm going to watch this right down in here. I'm going to let it fall a little bit more, and I might actually stab it with some micros right here. And then if I take a loss in 2 of the accounts, I'm going to do it with 2 of my accounts. Let me let it dip a little bit more. I'll long in 2 of the accounts, and I'll lose maybe $1,000, $2,000 if I'm wrong, and I'll hit it with all my accounts here and here. I'll split them up in 2s. I'll do 3 of my accounts here, and then 3 of my accounts here, and maybe 3 of my accounts there. Sound like a plan? And I'll turn this to another green day. All right. So we know, at least from here, it's roughly, just remember, a buck and a quarter off of yesterday's close. So we should be fine. So yeah, we're going to let this shit fall today. How you guys doing? How you guys enjoying your day? 1150. Holy crap. How do we get so many people in here? How many people is just like your first week in the community, by the way? I'm trying to show you guys my stats here, and Tradeify is like not logging in for some reason. It's a blank white screen, and it's not logging in. Let me see if we log up here. Dashboard. Yeah, so my funded live account's going pretty well. I'm excited about having the opportunity to go live with those guys. If you guys are new to prop firms, live account is a real money trading account. About 1 out of maybe, I don't know, 5,000 prop traders get invited to a live program. It's not that often. Usually only the best of the best make it that far. You have to usually trade with them for a while. You have to usually trade with stellar performance, and you have to get invited to the live program. So, come on in. Hold on. I don't think anybody cares if I can't sign. Hold on. All the green juice to make Maddie Hercules. Yeah. Thank you, babe. Bagel. Buddy. Go. Go. All right. She went all the way downstairs. Okay, so the half gap bounce is the one I was saying I might grab micros on, right? But I don't too really care about that too much. There's Pickle. He showed up for you, Jason. Oh gosh, he's being crazy. Longing from half gap. No trading yet. This was the long entry with, I was gonna do it with micros, but I just decided not to do it. Debbie said your first day you watch the videos and fast forward, you love it. Oh, cool. How to convert the QQ prices? Nasdaq chart. Hey, what's up, Gluey? By the way, Gluey's from Australia, right? I saw your message last night. So Gluey comes over here and watches stream at 2 in the morning. That's dedication, man. That's amazing. So the way that you do conversions is pretty simple. You do a ratio of the two prices. Example, like NASDAQ, you do the NASDAQ price and the QQQ price. You do the division. And it creates a fraction. And the fraction changes in real time. But the fraction is equal to your NQ level, whatever you're converting, to your QQQ level. Oops. QQQ. And so it's like cross multiplying. It's very simple. So say that you have a hedge pressure in QQQ that you want to convert to hedge pressure in NASDAQ. You just do some cross multiplication. You put this guy over here, multiply it by that. So this is the two prices, NASDAQ price, QQQ price, creates a fraction. Fraction times this gives you the value. And so what's easy to do, I'll teach you guys how to do it in a spreadsheet really quick. Let me show you guys something cool. If you guys Thinkorswim, you can do a very cool, quick bit of syntax. And let me teach you guys how to do it in Thinkorswim if you guys have never done it before. Did you know you can export live data to Thinkorswim? I don't know if you guys knew that, but let me show you the trick. Another Aussie here, Matt Cooper. Oh, awesome, dude. Awesome, awesome. Fellow Aussie TRS, look at all you handsome Aussie bros here. All right, here we go. You guys are staying up late. Super respect. Okay, here we go. All right, so here's a spreadsheet. All right, and here's a little bit of syntax for you. Did anybody here know that you can do this with Thinkorswim? I'm ripping this data directly from Thinkorswim into a spreadsheet. I'll tell you how to do it in like 2 seconds. So you have Australia, like the meme keeps popping up on my feeds, or the video keeps on the feed all the time. The Australian dudes that like are like he's like, oh, you're Australian, shrimp on the barbie. Have you seen this one? It's like these funny, it's like the funny like the American guys come up to the Australian guys and they're like, oh, you're from Australia? Well, shrimp on the barbie. And the Australians just look at him like, we don't sound like that. It's really funny. It's really, really funny. It was it's Aussie comedy duo that put it together, a comedy group that does these things. Call them prawns, yeah. It's like how Americans perceive Australians, and it's all the goofy things Americans say. Yeah, Jim Carrey. I think he's Canadian. Yeah, that one. Okay, here we go. All right. So here's how you do this, right? You can do it's very quick and easy. All you need to do is have Thinkorswim open and open Excel. And you can give yourself like, and here's a little bit of syntax, and this is what you do. And you'll just replace the middle thing. Like it's RTD. What I typed in, just copy and paste it in a thing. Mark is market price. You can change this to a bunch of different things like close for close or whatever. If you want the close price, you can get the close price. You can do mark for market price, and it gives you the live prices, right? So this is the live price for SPY. Oops, not B7, sorry. Let me give you the syntax better here. If you do whatever the ticker is, SPY, right? Oops, sorry. Let me do capital letters. Just some super simple, quick and easy. And what you do is, come on, Matt, don't be an idiot. Okay, SPY. There we go. And so basically what you do is you can type that in. It's the last one. Let me delete all these other ones. Here we go, right here. Stereotypes exist in large part thanks to Australian comedians and theme movies like Crocodile Dundee. I love Crocodile Dundee, man. It was a good show when I was a kid. Riding kangaroos to work is torture though. Oh, that's so funny. Y'all are funny. Okay. You live Brazilian, live in Texas. Cool. I live in Texas. Where in Texas are you? That's where we're from. Okay, so here, look, you basically can do whatever you want. So here is S&P. That's S&P's price. This is ES. This is the ticker for ES. It's ESXME. You put that inside of the thing here. And so I have the two prices, as I said, and now I have those two prices over here. I have a fraction. This is equal to the division of the two. This is converting SPY target to ES target. So this makes a fraction, and I can type in my SPY target. Say I have like a 495 hedge pressure, and I click enter, and now in real time, my ES equivalent is 49.99. So if I go over here and I go, well, let me convert the two. I want to buy hedge pressure in S&P. 622.5. What is that equal to in S&P? Oh, 62.86. So then I come over here, and it's literally that simple. So I can say, okay, 62.86, there's MHP, right? And actually the overnight dynamics at the same spot. Oh, you're in San Antonio? Oh, cool, Carol. Very, very cool. Yeah, you're like 2 hours away. San Antonio is a good place. Very cool place. All right. Anyone would sponsor you to live in Texas? What kind of skills do you have? Maybe. Do you know how to make sushi? We need a live-in sushi chef. I not eat so much sushi. Can a download link to Excel file? Just make it yourself. This isn't an Excel file for that. This is just an Excel file that has that in it. Basically, you would just rewatch the video. Okay, here, ready? Take the video from here. Write down the timestamp. Everybody, if you want to do this, I'm gonna give you 5 seconds to write down the timestamp. I'm gonna give you like a 1-minute presentation, and just remember this and save this and do it yourself. Number 1, open Thinkorswim. Number 2, open Excel. Excel should automatically load in this add-in called RTD. You don't have to even think about it. It should work automatically. You're going to go to one cell and you're going to type in exactly what you see on the screen. I cut and paste it in chat. So take that. This is just referencing the cell, but the cell is actually just the ticker. You can put whatever ticker you want in here, QQQ. It'll change it to QQQ when it updates. So mine's set to SPY. This is the ticker for ES. It's /ES.XCME. NASDAQ could be /NQ. And so that feeds into this part of the line. And then it gives you the real-time updating price of both SPY and S&P. Then what you do is you do a fraction of the two. The bigger divided by the smaller gives you a fraction. Then here you type in whatever. Then you just multiply that by your target and it converts to the other target. It's just cross multiplication. Very simple. So this is the relationship between the two prices. This is the target you want to convert, and this is the converted target. As you guys see, the converted targets move around in real time. That's why you see this, right? They're never the same, which is why our conversions will dance a little bit because the fraction is never the same. And that's why our algorithm to automate this for you guys is a little bit of dancey dance target. All right, resilience now negative again on S&P. This could be a gap fill to the downside. Rip to the longs today. Good luck, everybody. But yeah, this is good. Watching this, or likely to sell off, which is great. I'll get my A+ setups way down here. And maybe like on boot camp, I'll make a spreadsheet for you guys in boot camp or something, but make it yourself. It's not hard to do. It takes a minute. And then you can get pretty creative, but you can rip data straight from Thinkorswim when it's open. That's the best part. Make a spreadsheet and grab it live, which is kind of neat. Not A+, but like A quintuple plus. Yep. So, and that really kind of like, if you guys didn't know you can do that, you can grab options data from Thinkorswim. It's pretty neat. Like you can grab a whole options. Like here, if I want to take like the whole options chain into Thinkorswim, it's very simple. You just go over here, you click this button. Oops. You click this button. You go to export, go to Excel. And what that does is it adds all that syntax to the clipboard for you. Let me just pull up a blank random sheet here. And in a blank random sheet, I can just Control V and literally paste all that options data in Thinkorswim that updates live, including the prices. So as you see, here's the column for the thetas. As you see, the thetas are updating and the prices are updating. So you get all that live data and you can manipulate all your Greeks, all your whatever. You can also do it with like a watch list, and anything with Thinkorswim you can export. So like, you know, when Sazal built this platform 20 something years ago, this was a feature that he put in there. He was very good at at adding these things. So yeah, so you can export the entire options chain. Now the thing is you can only export so many pieces of data before it locks up and closes you out. I don't know what the limitation is there, but there is a limit to how much data you can feed to a spreadsheet. You can't just build a database leeching all the data from Thinkorswim. At some point, it will cut you off. You have to basically close down and turn it back on. Somebody used to tell me it was like 25,000 lines of data or something. I don't know really what that meant by that, but there's some kind of limit. So you leave it on for long enough, it will eventually lock up Thinkorswim. You got to restart it, but that's it. Microsoft ripping today. Come on, Resilience. Yeah, Resilience is fighting today. Like I said, today's going to be A+ setup, you guys, and thanks for tuning in. We're going to basically wait for a better setup, and I'm going to get a nice little long here. I'm going for a 15-day winning streak. Let's see if my Tradeify is loading up now. Oops, let me go to my journal here. It's still spinning wheel. Okay. Let me try this later. I'm on a 16-day winning streak though. This is day 16, so yesterday was day 15. You can do that on Sierra charts. Oh, that's very cool. Very cool. All right, so the appropriate trade today is, do I long at half gap or not? Long at half gap to fill the gap is a setup, or close is also a long setup. I'm gonna delete this, guys, because I don't want to play on any of these B setups today. So instead, what I'm gonna do is let me just move this out of the way, because I don't really care about this one today. We're gonna remove blue dynamic hedge pressure. We're gonna play with just the bigs today. We have margin buffer limit. You guys remember our yellow line class? Breaking yellow line could be a big nasty sell-off day. 62.87 is exactly where my A pluses are. There's a bull zone bottom there as well. That's a big, great setup. Those of you that are short, are you still shorting this? Because I'm on team short, just by by proxy. You guys are trading. I'm not trading it, but looks like right now I'm an honorable team short member. Okay, cool. Missing out on longing at the top, also a good trade. So good traders have that good instinct, baby. Okay, so today from here, looks like yesterday's close is 56.20. So a $1.20 off the close is going to be our AAA plus. So let me mark it up here. I'm just getting prepped for it. So a $1.20 on NASDAQ is 48 points. So roughly 22.92. And then we just delete all this because we just know we're gonna be waiting for one thing. I don't need to be caring about I want the A pluses. So I'm gonna remove those just because I want to hit these good ones. QQQ. Monthly hedge pressure. So that is QQQ. This is NQ. So they both kind of line up at the same spot. And then we also have like zone bottoms and all that stuff right here. So we know the A plus is here. So A triple plus. Negative resilience, which is we're still fighting. So this might actually hold. Positive resilience can go to fill the gap here, which is maybe what we'll get after maybe an overshoot or something. I'd be willing to grab along off of this just to grab along off of this. Let me double check fix though while we're chilling here. I'm just letting this kind of play out a little bit, but I don't really care to waste my time on. I don't know. It could be a 40-point move. I don't know. We got the first bounce here. Let's compare resilience on subsequent bounces. This is a trick to see if it's getting stronger or weaker. The first time we bounced, res was -6. The second time we're bouncing, res is at 5. So it's actually stronger here than it was there. Could be worth a bounce. S&P is going to fill the gap though. Can I take an S&P trade? Just risk it with 1. $18 to 10, 8 points lower. Positive resilience looks great. So the market is likely to support even from there. Let's double check where SPY's big pivots are. But boy, dude, if we got these like A double pluses down here, I'd be super stoked. 30 points lower on that. So right about 90. Let me take a long on this just to take one long. One contract, one account. I am in a little early, but we did overshoot half gap. So I'm playing on half gap still with positive res. We do have a stronger resilience the second time we've touched it. And again, I'm not super confident in this trade. I'm not really, I'm just goofing off here. I don't really have any desire to do much. Oh, we'll see. So the play, again, this is just, I'm just scalping with one contract. I didn't even get micros, I just grabbed one. There to there on positive res, greater than 0. Each tap has been slightly stronger. So this is actually not getting weaker, it's actually getting slightly stronger. But again, I'm just one account, one contract, S&P, nothing big. $500 if I'm wrong. I don't even care. My bigger trades are down here. So it's like, I'm going to do like a couple of plays off of half gap, one account, one contract. We land right here. I might add one account to the same, one contract to the same, just one account. Stop right there. Then I got my A pluses down in here. So nice, clean, easy setup. This is still the overshoot on half gap. I'm not early on the close trade. I'm late on the overshoot. So I let the overshoot on half gap. I'm taking along there. Resilience is a prediction for gap moves or not. And so this white line greater than 0, it's very likely to end up here rather than down here. With all things being equal, it is getting slightly stronger as the moments go by. And Nasdaq is at its own half gap here as well. Maybe I can try something. We prep for another account here. But again, I'm not. This is B setup. This isn't strong setup. This is B. So again, just tiny amount. Play money. And I don't really care to put a lot of risk on the table. And this would just be the long, just in case it picks up some steam. If it doesn't, I'm totally out and I'll get nice, juicy setup down here. This is the real setup that I want. So all my funded account, like everything else, I'm not touching it till down here. You ever run stats on the first trade I take it open? It's going to depend on the environment. Like bull markets, I trade at the open a lot. That's pretty normal in a bull market. And a bear market, not so much. So it's kind of depends on what market. I haven't run stats, but you can't run generic stats on that particular play because it's going to differ in different environments. A lot of time I'll bull at the open because DD ratio is always nice and strong. Monthly maps are nice and strong. 3-month outlook is nice and bullish. Here, monthly maps, solid, right? We're in a dark gray until September. We're bullish through September on S&P. So there's really nothing, scaring me. This market is really solid. All right, so we've got all the good juice down in here. Bum 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 bum. Might get a bounce on this. Keeping an eye on this white line here. If this white line stays above 0, we should hopefully be okay. It is taking a little bit of a dive again. Let me double check the stocks. My confidence in this is like a B, dude. It's not even good. It's just like, eh. Below MHP is actually pretty bad for some of the stocks. This is bearish hedging. Amazon, Meta's okay. Microsoft is okay, sorry. Meta is Meta's tanking the day. All right, I'm going to grab this trade on one more account. Just one of my funded next. One of each. Nothing too crazy. All right, grabbing it funded next right now. I'll grab it in 2. Actually, you know what? It's a B setup. I'll grab it with 2. So now I'll long it in 3. And then if I lose this, then I'll play all 9 accounts at the bottom. How about that? How's that sound? Just one tradeify. I'm added at my funded next right here at half cap. Positive res, hopefully get something out of it. I grabbed NASDAQ on those. Not bad, not bad. That's 40 points already. Jesus. All right. Well, okay. I'll take it. Okay. Okay. That was nice. That was quick. Scanner is showing, according to Andrew, 314 stocks under MHP. Wow. Okay. Right. So that could actually not be the best sign of this. So I've got 40 points already in 2 of my NASDAQ trades. My S&P is still sitting flat. See if we get the gap fill. My trade is only to gap fill though. If I get it. So again, trading through here. Let me get my little drawing tool. Just scalping along there. Where did my drawing tool go? Nope, you were up there. Boom, 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 boom. There you go. Get you on the table there. All right, so if you guys are just watching for the first time, I do a mix of positional risk analysis, which is gamma exposure. High volume, we do high volume pivots based on gamma exposure levels. And then I use arbitrage, which is basically watching the stocks while trading the index. What are the stocks doing? And I'll follow the index. Right now, the stocks aren't necessarily picking up a lot of steam. S&P and NASDAQ, while this white number is the most important piece inside of this white box. If the white number is greater than 0, this is what happens. It's half gap, right? So this is ignoring the note here. Again, I'm going to have these things automated so soon. If it's greater than 0, half gap is support. So this is a pivot based on this white line. If this white line is greater than 0, which it is, the market is more comfortable on this side of the box white line rather than this side. So the resilience being negative, the market is likely to move through here and end up there rather than here more often. Doesn't mean it's guaranteed, but more often, like the bets are. So if I was trying to short, I would want resiliences to be negative. And NASDAQ is actually really strong as well, which is why I decided to take along on the overshoot on NASDAQ, which is actually was a pretty good setup because I'm up 40, 43, 44 points already. So in my fund index accounts, as I was sitting here, I grabbed those guys. And those accounts are up $1,800 right now. And this one is up $12. So we'll see if we get it. Pretty awesome, pretty awesome. Okay, so half gap is a support pivot when res is greater than 0. It doesn't mean it's super bullish pivot. It's a B setup. I'm not necessarily like really, you know, loving this, but hey, I just sent you a friend request, Jay Hicks. No, I didn't. It's not me. It's Slightly Fatter Matt. It's that guy. So, you know, there's a joke. You guys, okay, so we have a contest going on right now. It's who can make the best theme song, or basically it's like right, rocket scooter music, right? And people are doing all kind of really funny AI songs. And we're going to give away lifetime to whoever comes up with like some of the better songs that we use on the stream. So somebody made a song, which is really funny, which is making fun of the idea of, you know, there's always like a bunch of fake mats that send people friend requests, right? Resilience, let me tell you a second after the joke. So you always get a fake request from you in Discord. that's like Matt sending you a friend request. And so they were like, yeah, this is the Matt that's sending you the friend request. And they actually wrote a whole song about the fake Matts. It's like, it's not real. Okay, let me close. Okay, I'm up. That's close and that's close. Okay, awesome. Very nice. So I got my trade. I went right back up to start. Let's see what we get. Resiliences are still okay. That was a nice long setup. Again, I played it with just one. So they call this slightly fatter Matt because this is the guy that's actually messaging you. It's fake Matt. It's literally me. This is my picture that I use in all my videos. And apparently it's AI green-eyed troll Shrek version of me. The Incredible Bulk. Yeah. So the song basically is making fun of... Oops, hold on.
Listen up, kids. This is Tale of the Fake Matt, slightly fatter version who wears DP next.
The fake... This is a tale of the fake versions of Matt. All right, right at gap fill. I'm going to go ahead and close. We're close enough. I'm going to go ahead and take profit on this. This was just a tiny little scalp. That's about 2,000 bucks so far. That's good. Half gap support, B setup. I decided to take it anyways. Pretty good, right? Meal Team 6. Oh, that's so funny. Listen to the lyrics. Okay, we'll do the giveaway in just a second, guys. Hit the like button really quick, guys. We're gonna do a giveaway in just a little bit. We're gonna do giveaways every 30 minutes, though, so stay here. So the lyrics, basically, it's like making fun of all the scammy tropes that you get from all the Discords. Matt wants to start a team with me. They're always like, hey, want to start a team with you. Let's buy some crypto, this and that. And it's basically like, this is the guy that's really messaging you. That's what the joke is. So it's really funny. Hold on. Let me get to the... Hold on. Even Slacks made it into the song. Listen. I messaged Slacks. The fatter Matt's this bigger bit. It's like a big bitch. That's hilarious, dude. I think he stole my credit card. And Slacks is like, this isn't us. Slacks is Andrew, by the way. Andrew the mod, so. And then, so Matt come back from the spa. He saw the commotion, and thanks to Slacks and Mike, here's Rocket Scooter for life. So he even wrote Mike in his own lyrics that I gave him Rocket Scooter for life for busting a fake Matt scammer. These are the things that you guys are writing in the AI songwriting contest. It's fucking brilliant. I'm like completely blown away by how hilarious. Like last contest was cool. We had a ton of cool songs come out. This contest, you guys have gotten insanely clever. Like these songs are hilarious. So if you go to our channel and our Discord, just to play, if you guys are gonna get on the fun with the community, like I said, we have a huge community. Everybody has fun with it. You can go to the song submission channel and submit any kind of song. And I mean, people are writing songs about all kind of stuff right now. Apparently this one's called Addicted to Crack. There's one that's like Rocket Scooter Jam. Boot Camp now only $20. Theme songs. There's theme songs are all kind of. Volume is King, Rocket Scooter Flow. It's kind of anthems. Arby's thing. There's a Green Juice song in here. If you guys do write the song and we end up using it and we like it, we're going to reward you with lifetime Rocket Scooter. It's kind of like the cool thing. So in about 2 weeks, we're going to start narrowing it down. Use Suno, S-U-N-O is what a lot of people write their AI music with. And feel free to enter the contest. It's really fun. It's really funny. We'll play some of the songs live on stream, and then we'll have the community vote on which ones we keep. What's the one strike distance for Russell? I honestly don't know. Let's look. The easiest way to do it is to just measure the distance between two moves and just see. Let's find something that's easy for like one. Let's just pick a move. Russell broke through at 8:39 and Russell hit this at 20. Hold on, wait. Like just as what you do. Let's measure the move. 839. Russell's at 223.20. Okay. 223.20. The slightly fatter Matt. The fake Matts are sending you guys messages. Too funny. Okay. Then the next tap was that right at exactly 904, we had 222. Okay. So 904, we hit 222. And then next we're going to go over to, I don't know what the ticker is, but let me try to guess. RTY, I think, in our platform. Yep. So we're going to go to RTY. We're going to look at the same distance move here. And at 839, we are at 2262. I'm going to round up. 2262. And then at 904, this is how you would do it. 904 on the bounce, we were at 2249. Okay. As you see, this is about 13 points, and this is about 13 points. It's 1-to-1. Am I doing that right? So this has moved 13 points. So 10-to-1. Sorry, 10-to-1. So Russell is 10-to-1. So every one strike in IWM is 10 points in Russell. Very simple. Looks like that's easy, just like the S&P is. So whoever asked about Russell, hopefully that helpful. I actually never known Russell because I don't trade it. So hopefully that helps you do the math there. But it looks like every single strike distance in IWM is going to be 10 points in Russell. So that's pretty cool, right? So it's like 40 points in NASDAQ, 10 points S&P, and now 10 points Russell. It's good to know. Okay, good. Made some money there off that trade. This is Resilience B+. Or I say B setup from positive res off a half gap. Like I said, you know, I don't try to become a bear. I just try to get in at the right bull spot. Nice trade there. I choose whether to trade ES or NASDAQ by proxy. The one with the stronger resilience is usually why I decide to trade. So I grabbed one contract in ES. And then in my NASDAQ, I grabbed NASDAQ contracts in my, one ES in Tradeify. I traded in two of my accounts NASDAQ on Fund and Next. So because NASDAQ was stronger, I hit it with more accounts. This is just a gap fill play. Resilience predicts, well, it tries to predict index gap fill. Half gap is support, res is positive. Did you guys see that analysis? Everybody here saw the analysis I did, right? Why I decided to take the long here. I was in, I was out. That's it. On the sidelines again. Trading is all about waiting and sniping. You guys are witnessing something really good. I explained my trades beforehand. I took the half gap to support. This was a pretty good setup because this was a 2-to-1 trade. The gap was so prominent. You can get 80 points and lose 20 to get out. So I made $1,870 in my Fund and Next, and then I made $150 in my Tradeify. Holler, $2,000 so far. I'm just gonna wait. So anything better? Again, I'd like to see the A pluses, but again, I'm not shorting this, right? Let's check our VIX hedge pusher and stuff here. Okay, guys, we'll be doing a funded account giveaway in just a little bit. We did hit our mark of 1,000 viewers as always. We actually had record-breaking stream today. 1,140 beats the last record of 1,120. We now have more and more people. How did you guys? Let's be honest. Those of you guys that are new here, there must be like 100 new faces here this week. How did you guys hear about us? I'm just curious. If you're new here, give me some feedback. How are you guys discovering our stream for the first time? You can be honest about wherever it came from. How did y'all hear about us? Twitter? Dude, Brent, I never call it X. It's just weird to say X. Like that, like just saying X is a weird feeling in your mouth. Like even the consonant sounds weird. Like Twitter is like the most beautiful sounding name for what that thing is. I don't know why Elon changed it, but Twitter just sounds, it rolls off your tongue. X just has that sound to it, right? I'm gonna call it Twitter till the day I die. Twitter is goated. Twitter was such a it's the brand. Everything with Twitter was perfect. They literally knew how to do it. All right, cool. So YouTube, random, just recommended YouTube. Ah, cool. Saw on Twitter at an Arby's menu. Yeah, we started advertising at Arby's. They put my face in between 2 layers of roast beef, and it's been getting some views, you know. Call it the Rocket Burger. Not that new, but it's all my friend Futures post about it. Seen this before, like 2021, but never messed with it. Oh, cool. Searching for fast scooters and rock scooter popped up. It happens. You found me on Pornhub. So did you find me in the comments, or did you find my feet channel, my feet pick channel? Because if you found the feet pick channel, that's where I make my real money. Victor told you to come here. Victor is out there. Victor didn't tell you to come here. Victor threatened you to come here. He threatened to break your kneecaps if you didn't come. He's very persuasive. Twitter is goated. Yeah, right. At a bathroom wall. That's what most people say. Okay, can I tell you guys something really funny? And I swear to God, if you do this to me, I'll kill you. Don't do this to me. Do this to somebody you hate. Okay? God, this is horrible. All right, so my friends went to this big party for the July. My friends telling me this troll that they heard or they did to somebody they didn't like. And so they put somebody's phone number on a bathroom wall with a note that said, send us your best Chewbacca impressions to enter the contest for a free trip to Disney World, you know, for Star Wars, blah, blah, blah. Call this number and leave your best Chewbacca impression. And so the guy for like ever would get like voicemails like, he would just pick up the phone and people were like growling at him like Chewbacca. And so this is like the ultimate horrible troll for you just to pick up the phone and people are like being so don't do it to anybody unless you really, really, really hate them, but because it will never end, they'll have to change their phone number. But like, how funny is that, right? It's very harmless, but also very annoying. And like every other time you pick up the phone, somebody's like growling at you like Chewbacca, right? Right, that's horrible. So I don't know if they said they heard somebody that said that happened to him or that they did it to one of their friends. Our friends are kind of like frat boy pranksters, so they probably did it to each other, but I'm sure it was like somebody in their frat or something. They were telling us the story and it was just a hoot. I was like, as horrible as that is, it's really funny. And like, even if I was on the receiving end of that, again, don't do that to me, guys, because I'll have to change my number. It's really annoying. But you know, the idea is that I would probably laugh every time. It would be so funny. He said like even to like, you know, years later, occasionally he'd get a phone call of somebody just growling at him. Leaving voicemails in Wookiee. So yeah, so. You said there's an Indian guy that teaches math and physics on Pornhub. Are you kidding? I love how like I've seen like memes on the internet because I clearly don't go to Pornhub. Well, I live in Texas. I couldn't even if I wanted to, but because it's blocked here. But they I've seen some memes that were yeah, there's like the comments and people have like existential conversations, like it's like Reddit almost. The funny things that happen over there because VPNs don't exist. Well, this is true. I don't have VPNs though. I don't surf anonymously. Dun, 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 dun. To win one Bitcoin, call Matt and do your best. Oh yeah, right? You know what I'm saying? Like the idea that honestly, there will always be somebody that just calls just for the hell of it. Oh yeah. Although I'd like to think if I was on the receiving end of that over time, I probably would just have fun with it because then you make a thing out of it. Then it's just like you embrace it and you have fun with it. Did you host a big meetup? You post on Reddit, you go viral, you get on the news. Local person gets phone call every day. People saying, "Oh yeah," and then they have the "Oh yeah" meetup of 2025. Everybody meets up. It was great. They donated 30 grand to charity. You know, something like that. I would turn it into a good thing. Is it blocked here in Texas? Yeah, it's blocked here. How would I know it's blocked? I mean, iDoc told me. Duh. There was a big thing. I forgot why it was blocked, but it's like it's blocked because of the verification standards for miners or something. I don't really remember, something like that. So I remember reading something about it. I use better sites than that. Come on, let's be real. Why am I calling you like that? Okay, guys, we'll do a giveaway just a little bit. So you guys found on Twitter or YouTube recommended. Cool. So if you guys are just curious, like what is we do here, I'm a real-time futures trader. I have been trading a real account since I started streaming in 2016. About 2025, I started in the prop world. I now work for My Funded Futures. I'm on their TV show. And I also have been live streaming props since the beginning of this year, for the most part. Prop firm is a whole new thing. Now that I work for Big Prop, I'm endorsing Big Prop and showing off kind of things about it. I'm doing the prop accounts to show off, like, you know, basically how hard it is and how I beat the challenges. I decided this year, my goal was, let me go get live in every major prop firm. I never did it before. I trade by real account. You ever see me pick up my phone? I'm trading my real account. I have a live, my own live futures account that I trade my own. And I also have a Webull account I trade options in sometimes for swing trades. So you see me pick up my phone, I'm making trades there. On my screen, I've committed to showing you guys 3 prop firms I'm working with now. Tradeify, straight to funded. I've taken these up to about 190,000 in profit. About to go live there. I have My Funded Futures. I am live there, and I'm live in Elite Trader Funding, but I don't show that on my stream. I trade that off stream. I commit to just trading a handful of things on stream so you guys can watch the entire journey. I don't ever tweet or post about the things I don't show on screen. Just to be fair, I think it's unfair for gurus and people to go out there and tell you what they did off screen and you're like, oh, I didn't even know you were trading that thing. So on this stream, since for like maybe 3 months, I've been committed to 3 Funded Next accounts, 1 My Funded account, and 5 Tradeifys. And I trade those 9 accounts on the stream just to watch the journey. My Funded live account is, you know, live accounts are earned. So once you start making enough money with these companies, you earn a live account, they give it to you. And very few people get live, and live is the ultimate goal you want to be at as a trader. So right now, you guys are watching my journey to get a live account in every prop firm. I'm going to just make as much money in each one of them and be the person that goes live in every one of them. Just to show that I can do it and show you guys how I do it, and y'all can learn something about the whole process. Some of you might be struggling to get your first payout. So, you know, that's the journey you're on. I mean, I've been trading for 15 years, so it wasn't hard for me to modify my strategy to get payouts here, but it's just all about position sizing, risk management. So on this stream, you guys will watch some professional level betting strategies, risk management strategies. I'm a mathematician with an engineering degree. I work for my company, Rocket Scooter. I built this trading platform you see on the screen. And I also work as CEO for Rocket Place, which is a trading marketplace. So I'm a very busy guy in the space, but I do also live trade. And I'm also on a 16-day winning streak. So might get the A+. It'd be nice if we got it. Resilience is now negative in the S&P again, and it's actually more negative than what it was. And just for shits and giggles, is there a short setup here? The S&P is doing much worse than NASDAQ, and NASDAQ is still nice and positive. So we do have a little bit of index divergence here. The light should, oh, it's not big enough yet. So we need S&P to be less than -10 to show a bigger divergence. So we're almost there. It's yellow, but we have rotation, right? People dumping out of S&P and jumping into NASDAQ. NASDAQ is actually not what's selling off. S&P is probably going to go lower low. And NASDAQ is still going up higher high. A little bit of divergence here. Really strong rotation. And that's really what's letting you know that. How do I know the rotation is strong? We're going to go to the SPY Sector Tracker website. And we're going to look at how the sectors are moving around. Clearly, tech is crushing it. And everything else is not, right? So this is your Mag 7 pushing things higher. Everything else is looking kind of bad. This could be a short setup, you guys that are actually in here. And I don't short off of these beast setups, but I do think the market's probably going to fall lower. We might actually get this nice A+ setup on S&P, and it might actually happen first before the NASDAQ one does. So we're keeping an eye out on S&P today more than anything. And negative resilience is what fills the gap down here. Okay. This is actually negative. Change this number here. If you guys have any questions about my trading style, feel free to ask me. What you see every day, which what most people don't show you, is I open up the stream by showing you guys my broker statement, historic. I literally log in and show it to you guys. Nobody shows you historic performance. People try to show you camera tricks like I made 30% gain or something weird like that. Show me a cold hard cash, how much you actually made, and I'll believe you. Right? And you can make 30% on $5. I mean, that's not really impressive. So, you know, there's nothing more authentic than just logging in and showing the performance report live on air. Any moment in time you ask, I'll show it to you. Transparency through the roof is what I believe in here on the stream. I can't Photoshop live video. Wish I could, but I couldn't. I'd Photoshop most of you guys' comments out of the stream. I'm just kidding. I love y'all. But seriously though, that's important to me to show my performance, win or lose, and you guys can watch the whole thing. Lucky for me, I'm on a 16-day streak. I made $60,000 in July so far across these 9 accounts. And here we go. Here's the gap fill. Resilience less than 0. We are filling the gap. White line less than 0. That's it. I wouldn't be long at the gap fill. I think I do want to let it fall for the A pluses, and I think you guys are onto something. I did take that short scalp. You know what's funny? A lot of you guys were shorting, and in the middle, I grabbed the long scalp and got out of the way. Do we all make fucking money today, right? Who here is still shorting this, by the way? I didn't short this. I grab longs on the way down, right? This is why you can make money both sides. You just got to get on the right trade. They're crazy, right? I was in and out, baby. 2,000 bucks. And I'm just waiting. Yeah, UVXY. We do have monthly hedge break, as Andrew keeps pointing out. Be very careful, guys. Hedge pressure break on VIX is a warning sign. We have early warning sign that volatility can pick up. Market can start speeding up from here. Do we all see this? This is one of our irrational rules. What it means is an immediate caution. If you go down to the cheat sheets, thank you, Andrew, for reminding me that. On the cheat sheets, we have our irrational rules, right? And you can see right here at the 5 that are like basically 2 of them are automatic sit out, 2 of them are small trades only when conditions are true. MHP breakup UVXY trade smaller as volatility is increasing. This is small trade day today, and we have broken through MHP on VIX. This can cause a gamma squeeze and like extended delta hedging in VIX, which can cause the market to become very wide very quick, right? So be very careful because the volatility can be picking up. I'm not going to grab this long here, but if you guys want to know what volatility picking up looks like, it's because the V's are getting bigger. Do you guys see how the V's are getting bigger? That's your volatility. Volatility means V's. And I can just, let me draw with a white so you can see it better. The V's are like this, right? Small, bigger, bigger. Do you guys see how the volatility is expanding? This is what happens when you get delta and gamma squeeze in VIX. Volatility goes up. So this can trigger a really nasty move. So be very careful today. Is it lower VIX, less volatility? So VIX is not a base. It's a great question. So let me explain what it means to you. The answer is on the surface, yes, but there's no such thing as like low volatility and high volatility. Volatility is relative to itself. So think of it like this. It's not a base state of volatility. It's like saying what is cold. There's no such thing as cold, right? There's just colder. If I turn the temperature down a little bit, it gets colder. So VIX, there's not like a what is volatile? Well, VIX can be any range. Like, where do you draw the line? In reality, compare VIX to itself. Great question, Levi, right? So VIX is lower in general compared to April, yes. But VIX is possibly higher relative to Monday. So changes in VIX are what's important. Think of it like temperature. What's hot? Well, what's hot to you may be cold to someone else. And so we call it base state in engineering. So it's like there's no such thing as base state volatility. We just see volatility is increasing. And so when volatility is breaking a key level, VIX itself can trade higher, which means the market can realize that volatility and become super volatile super quick. So it's not just the fact that VIX, and the fact that VIX is low, as you're saying low, is correct. It's low relative to April. That's why these V's are only 10 points, as opposed to if it was in April, these V's would be 60 points and 80 points, but it'd be the same relative expansion, just with a bigger range. So lower VIX, the V's are smaller. Bigger VIX, the V's are bigger. but we're concerned with the VIX getting bigger throughout the day. So while it's only getting like 5, 10, 15 points in S&P, it's because VIX is low in general, it's only 5, 10, and 15. But if like this was April, this would be jumping hundreds of points, right? Does that make sense? Right. So the problem is that we broke VIX to the upside. That's the caution. So what caution means is trade smaller in general, because whenever you get a hedge pressure break to the monthly side, the market, it can pick up some steam very rapidly. And this is an illiquidity pocket. Hedge pressure break into IP can be a warning sign for market crash, or like a quick volatility expansion, like a quick, big, nasty flush candle. So right now we're literally standing on, right now, guys, anybody longing the market right now is literally walking on ice, right? That is getting thinner as you walk. Okay, so the long side is very dangerous right now. Doesn't mean not be long, doesn't mean not be anything. No investment advice has been given here. But what it means is it's you're walking on something that could just break any moment. Okay, so clearly for the last all day, we've had this early warning sign. And therefore volatility can expand very rapidly. Does everyone see what I'm talking about? And as I'm talking, we're watching just very low volume move this market. Look how we're declining with no volume. That's volatility for you. There's just no buyers. There's no volume, and there's clearly no buyers in the little volume we do have. That's why VIX is increasing. So that VIX is very important to you guys, like trading futures and stuff. You may not have ever thought that VIX futures is very important to you. Sandra said, might as well be walking on the sun. There you go. Right? So be very careful that VIX is giving you a warning sign that the market's a little unstable. So while it's like, okay, it looks nice and cozy, it's like not really moving that much. The ticking time bomb on VIX is literally alerting you to a widening range. We can easily see that the range is widening, right? That's easily seen by the fact that you have a hedge pressure break in VIX is one of our irrational rules. And we had this class the other day. Anytime you break MHP, when we use UVXY, but any VIX instrument can clue you in on the same thing. Trade smaller as volatility is increasing. And so to answer your question, Levi, you're 100% right, bro. And it's not that volatility is low or high. It's volatility is increasing. Increasing means relative to itself. So it's not like, it doesn't matter if it's 20, 30, 40, 50 VIX. Is it increasing relative to itself? And that's really the key point. And you brought up a good point, Levi, because a lot of people think that VIX is low or VIX is high really means anything. But what you really care about is VIX is getting higher throughout the day or lower throughout the day, which is showing the compression or expansion of the range. Yeah. So you nailed it, because VIX is low, which is why it's not falling like 500 points, right? It's falling 5 and then maybe 10 and maybe 15. It's getting slightly wider, but if VIX continues to go higher, we can get some maybe 20 and 30 point chops. Now, if this was like April, like before all the trade war stuff chilled out, we could be falling hundreds of points because VIX was at 30 and 40, right? It's so we really care about day to day as a day trader, expansion of that VIX like relative to itself, right? That makes some sense. Yeah, I love that question. It's a great question. And you guys may be futures traders. You're like, I never even thought of any of this stuff. I just trade props. VIX is extremely important to understand the market. What am I doing with it right now? I'm possibly sitting out on a big fat market sell-off. With that volatility expansion coming, oh, odds are even better that it falls to my A+, where I'll have a 20K day, right? So it's like, do I want to be like my buddy Keith, or go against my buddy Keith's warning that says, don't pick up pennies in front of a steamroller? Do I want to make a couple scalps here? Or do I want to hope that that volatility expands to a degree that we get a big old delta squeeze and it falls really quick? We overshoot monthly hedge pressure. Then it loads up right there and I long it right back up to the middle, right? So now I can use that information to wait, and it'll look like magic if I get it right. People would sometimes say like it looks like Matt has a crystal ball, but I don't. I'm just trying to trade a step or two ahead. What happens if it rallies from here and I miss out? Nothing. Nothing at all. I miss out. What happens if it falls to my A+ setup? Well, the probability is pretty good that it could fall if VIX is getting higher. So why don't I wait for that? And I'm going to look like a wizard if market falls to my level, and what looks like a falling knife, and I jump right in on the long side. That's how I think when I'm trading. Let me get ahead of everybody. Nobody sees this coming except for you, me, and everyone else, because we have Rocket Scooter. Immediately when VIX broke monthly hedge pressure again, we knew the volatility is expanding, and I've been talking about it for the last 15 minutes. And as I'm talking about it, the market is pressing lower red candles with moderately low volume. That's what volatility can do. And so now it's like, watch you, me, and everyone else on this stream possibly sitting out on a big dump that might happen in just a second, right? And as cool as it is, people say like, Matt, how do you, have a high win rate, or how you do whatever? There's a lot of thought I put into my trading, and it's all risk management. This is a risk management choice. Do I want to put, do I want to try to make another 20 points in the S&P from here against the indicators? I'm on such a great path winning. Could I scalp the half gap where that resistance is? I mean, sure, that's a 1.5 to 1 trade. Sure, I can make $500. Sure. But what happens if the volatility, the ISO market crushes, and the VIX just speeds up an accelerated sell-off? I'm down 25 points in one account in case volatility goes out of control. So no, I don't want to make 15. It's not really 1.5 to 1. It's 1.5 to 2.5. If I really think I can fall to the level I do want. So what I do is I say, you know what? Let me hold off and let's see if this crashes to the level I want. And let me get in the long there. And then now, as everyone else is sitting here waiting, monthly hedge pressure, 90% of days usually close above it. And with monthly hedge pressure resilience as being positive, it's a very likely chance that we do hit my MHP levels and we hold. So is everybody here in Rocket Scooter, this is like textbook. You guys understand my play because you guys have gone through the boot camp. But everybody that's new here, do you also understand my play? Right? I'm gonna wait for it. And 90% of days will stay in the same zone we close on. We open in bull zone, we'll stay in bull zone. 90% of days under ideal conditions will stay above MHP. So as Simon keeps saying, we've got A double plus down in here, 2 A pluses on top of each other. And on QQQ, we've got 3. We have an A plus, and an A plus all stacked on top of each other, and another A plus 40 points below it. So if we do get a nasty little fall, I've got longs all over the place here, right? Shouldn't it say close above? Right, it's close above is the oh, yeah. Sorry, this is left over from yesterday. Sorry. Thank you for reminding me. Yep, this is why I can't wait to automate this, because and the 90% comes from ideal conditions. Let's check. Right now, we don't have ideal conditions across the board. We have some reds and some non-ideal conditions, right? So in non-ideal conditions, our back test is actually that MHP holds 74% of the time. And let me show you guys the back test results performed by an independent analysis. Independent analysis performed by a volunteer from the community who decided to take it upon themselves to do the back test on this particular indicator. And let me show you guys the publication he did. Just a member named Humble Trader 77. He decided to catalog a whole all 2025 version through the bear market. So he did the bear market analysis of these same pivots to show the probabilities that they hold. And this is all the way through April 18th, which was the bear market. So in the bull market, it's about 90% time it holds. In the bear market, 69 plus 4%, including overshoot, is about 73% of days should hold on the orange side. So 7 out of 10. Only 1 or like 3 out of 10 days breakthrough from the upside. So MHP maintains the same side roughly 70% of the time. And what it is gamma exposure level. It takes a whole lot of selling pressure to tip all of Wall Street into negative gamma. It just doesn't really happen that often. So because of that, worst case scenario, roughly 7 out of 10 days should hold there. This data is the bear market. So on all of data, under ideal conditions, the bull side holds 90% of the time. That's years of back test. We had a bear market since COVID, and now that we have everything here since COVID, this was strictly the bear market probabilities. So this was from the start of the year through April, the big market crash. So this is just the crash data. And even in the market crash, which is what we consider worst case scenario, the crash isolated under all conditions still holds above 70%. So in ideal bull market, it's 90. In bear market, it's 70s. So effectively, it's somewhere in the middle. Does that make sense? It makes sense, right? We wanted an isolated bear case to see what the worst case scenario would be like. And so in the bear market, we still held 73% of the time, which is to show under maximum volatility that we still make its way through. And also we want to see how many times we overshoot and stuff. And so this was just the big crash environment. And then like 4% of days would overshoot and come back. Alrighty, hold on a second.
And we are offering short-term unsecured business loan with no
Really?
collateral, no personal guarantee needed.
No anything. I don't have to pay it back at all. You said that. I heard you say that. I don't have to pay it back, right?
Yeah, you have to pay it back.
No, you said I didn't have to pay it back. I heard you. Everybody heard you.
No.
And we heard you. You said it. You don't got to pay it back.
No. Are you kidding?
No, I don't kid. No. Do I look like a clown? Do I look like a mime? Do I think like I do this for a job? You said I don't have to pay it back. Can I have, look, I need $1 billion.
Okay, I can give you that if you have a minimum monthly deposit.
I only make about $100 a month though.
Then you are not qualified for our business loan.
Are you sure? Because I might make 150 next month. He said I didn't have to pay it back. I heard him. Okay. So anyways. All right. I swear they call like every day. I think I annoy them enough. He'll like be like, this guy again. I'm not calling him. Okay. Anywho. The guy can't find the script for this part. Yeah. $1 billion. He's like, okay, I can do that. I was like, oh, really? Okay. Yeah. Okay. So anyways, it looks like volatility is expanding a little bit. I think it's good to sit on the sidelines for now. We might get some big nasty red come out of this, but the probabilities are pretty good. So 7 out of 10 days usually will hold MHP. About 4% will overshoot and come back. So there's really good probabilities there. So I'm going to wait. That's actually my better setup. I'll wait on that. Okay. In the meantime, you guys, we're going to do a bunch of giveaways today. And I don't know if one of our members said he was going to donate $500 to the stream. So I don't know if he's doing it now because he wanted to do, so let me read you guys something really cool that I got yesterday or 2 days ago from one of our members. And I make a promise to you guys is that, our guys in stream, I love this. We have this this thing here where people have been donating and giving back to each other, and it's been so crazy. This time of the we do this boot camp, which is this trading class we do. It's $20 for 20 days. This session, we have given away 162 free seats. I've been counting because members take it and they're like, they donate money to the stream. Like, I'm going to buy boot camps for other people, and then I started matching it. We've been giving away boot camps. So this month, 162 people have taken the boot camp for free. That's what it's like. So one of our members, Soldier, said, hey, Matt, I've been killing at trading. Thanks for the course. Just messaged me out of the blue. Thanks for the courses and platform. I reckon I'll be transferred to live with Tradeify soon, which is very awesome. He might get there before me, like in 2 weeks. Very cool. And he says, I'd like to give back to the community. I'm thinking $500. Would I rather donate that towards 25 boot camps or for you to buy Tradeify straight to funded accounts? $500 just gets a couple of accounts. But so what we're going to do is when he donates, he's going to donate 25 boot camp seats and I'm going to donate 75 boot camp seats, meaning that I'm going to give $1,500 to the company. And between Soldier's donation, when he does donate, and me, we're going to give away 100 more free seats to the boot camp. Free. That's it. So 100 of you will be able to take the boot camp for free on the next go in August. So that's, again, a gift from me and a gift from our friend Soldier here. You guys. I told people this time around I'll donate 3 to everybody's 1. So we will buy together 100 seats for the boot camp. And then again, these are members that go through, they become funded, or they go to their live and they decide we want to pay it forward. It's a really cool tradition we have on the stream. And again, it's the stream here and the community here is by far the best trading community on the planet. These are some really quality people. Most of you guys are. Some of you guys are shitheads, but that's okay. Most of you guys are quality. And so we have this really good, awesome community. It's like the best community in trading. Funny people, fun people, very smart people, the smartest people in trading. And up over here, it's a bunch of programmers, engineers, and hackers and stuff. We have an engineering degree on the wall there. A bunch of us have engineering degrees. So you get kind of like that smarter communication style. You don't get a bunch of like kids being stupid in our Discord. It's a lot of like high level discussion and you feel like an adult for sure. Yeah, so what happened was one time we did the boot camp. It's $20 for 20 days. We really train you on trading. It's $1 a class and it will always be $1 a class. It's always been that way. I never want to charge anything for a big education. It's the only mentoring I do is this group class. It's $1 a day per person. It's completely affordable for anybody. And so as people went through the boot camp, one time we started the program and maybe like 30 people came. It's very cool. After it, we did it again. And then somebody was like, hey, you know, I went to the boot camp and I finally got my first payout and I'm finally making some money. I want to pay for someone else to do the boot camp. It was a life-changing experience for me. And then that person donated 20 bucks to the stream and they bought a boot camp for someone else. And a couple more people stepped up and was like, yeah, no, honestly, I'd like to buy a boot camp seat for someone else too. This is incredible. And then a couple people just stepped up and started buying boot camps for other people. And then as we did, this is boot camp series 11 now. And each time we do it, the tradition is carried forward. People were like, yeah, I want to buy more. And somebody came in like, I'll buy 5 boot camp seats for someone. And then the members are trying to outdo each other. And then I started coming in and saying, okay, for every boot camp you guys donate, I'll donate one. And then on that particular stream, 20 people donated a boot camp. And then I donated 20. And then we had like 40. And then as it went by, it now became the tradition is that as people go through the boot camp, and if they have a good experience, they pay it forward. And now it's boot camp series 11. As I said, we've given away 162 free seats. So it's kind of like just a continual pay it forward fest. And it's just become this really awesome thing that shows how powerful like a community can be. And you guys are such a cool community donating. So, and then Soldier now is coming through, wanting to donate 25. So him and I together are going to donate 100 seats. You know, that's $2,000 a month of MRR we can be making trying to sell you guys something. Just give it away for free, whatever. The point is we want people to learn, and you're on the stream, you're going to learn. As I've been teaching a lesson about volatility, I love as I'm teaching a lesson about something, it freaking plays out. I love that idea that I can be ahead of the curve and know a little bit more about the market than the next trader. This is what's important to you guys as traders. You don't got to figure out the market and beat everybody. You don't have to figure out everything that's going on. You don't have to be the best trader in the world. You only have to be better than the trader you're trading against. And that's really important to understanding how you'll succeed in this business. You just need to be less of an idiot than the person that's on the other side of your trade. That's it. That's really it. And with these few tricks, you'll know more than most people. And that's really important because the other side of your trade might not be as smart as you. And that's really all that matters. Am I going to enter any more trades? Right down here. My A+ setups are down here. I've been waiting all morning for it. S&P closer to there. Nasdaq is a little further away. But this is that volatility expansion Levi and I were talking about earlier. This is exactly what we're looking for, right? The V's are getting bigger. You guys see that? Did y'all learn something about VIX today? There's a reason that irrational rule is there, you guys, because it's going to alert you to that. Now, question, I'm sitting out because I'm safely on the sidelines waiting for the long. I've already made 2,000 bucks today. How many people have shorted this and are still short this and are riding this volatility wave right now? Just curious. And how many people are upside down on a long and losing? I'm just want to curious, like as a vote of the community, how's everybody doing? You guys are shorting, 8th short just now. I've been flat riding it short. Man, you guys are smart. Even, and the cool thing about this stream too is that a lot of people are like they're joining trading streams of all these like dog shit guru traders because they want to follow somebody's trades. Isn't this funny? All you guys are getting paid out, and I ain't even telling you guys what to do. Y'all just know what to do. This is where the smart people hang out. I'm not even at all doing the same kind of trade you are. I longed and made money, and you guys are shorting and make money. I didn't even tell you guys to short. I'm not even giving any trading advice or tips at all. I'm not telling you guys where to long and short. You guys just learn how to trade, and this is what's important. All right, type in Tradeify. Let's go away a funded account. One of you guys will be a funded trader in about 20 minutes. Pretty cool. All right, now we get close to my A+ setup. I'll take some longs on here at the bottom. Type in Tradeify in chat. We'll do a drawing really quick. Every time we get to 1,000 concurrent viewers, I'm going to give away one straight to funded account with Tradeify. We love Tradeify right now. If you use code ROCKETSCOOTER with Tradeify, you get one account at 50% off. So go get a straight to funded account already. Oops, I'm sorry. Tradeify. Tradeify. Sorry about that. Current deals going on right now is Tradeify is 50% off of one account. I think that ends tonight at midnight, by the way. So make sure you guys get that. Code ROCKETSCOOTER. Actually, no. You have to use our link. Our link in the description. And TVT is the code. Yeah, we're weird about this one. But even better, my funded futures right now is having 50% off one account until the end of the month using code ROCKETSCOOTER. If you want to get the My Funded Futures Expert account and get it. I'm going to tell you guys, I'm about to leak some information for you. I can't tell you all the juice, but this month, as in a couple of weeks, the biggest sales are going to happen, and I have the inside scoop. Nobody knows yet about them, and everybody that does know can't say anything, and I can't say anything. But I'm going to tell you guys, in about a week, huge, I'm talking huge changes. The biggest changes ever in the history of My Funded Futures are coming. So get ready to spend. If you guys are going to buy prop firms, you love My Funded, just get ready. Cool stuff is happening. That's all I'm going to say. It's very cool to lead you up into it, to let you know. Another thing is, in about a week, Funded Next is going to drop one of their biggest sales they've ever had. They've revamped their program, and soon they're coming out with the straight to funded program. But I'm going to drop a hint to you guys about the Funded Next sale. Here's the hint. It might be like the last one, and that's all I'm going to say. It might. So if you guys are like getting your wallets out, like I'm going to buy some prop accounts this month, wait for My Funded Futures and wait for Funded Next. Big things coming out next week. Okay? Okay? I didn't say it, Oscar. I didn't say it. But I know you guys like big things. So I'm just letting you guys know. For you guys, so y'all can go out there and like waste your money on buying like 20 Apex accounts today or something. You know what I'm saying? In about a week or two, you guys can get some really cool shit coming out. I mean, like really cool. So just letting you know. Get ready. I can't tell you what it is. It's just going to be cool. All right, let's spin the wheel. We're about to get close to my A+ setup, but while we're waiting, let's spin the wheel. This is what I love about working in big prop. I get the inside scoop. Therefore, you guys get the inside scoop. I wish I can tell you more, but I can't. In the meantime, we're going to spin the wheel. We'll do another giveaway in about 20 minutes, so don't go anywhere after this. The bullseye. Everything rocket scooter. This is for a Tradeify $25,000 straight to funded. Wait, hold on. For 50. Hold on. Let me see what it is. Your name is drawn. You're now going to be funded with Tradeify. This is 50K. Oh, my bad. 50K. One of you will be a $50,000 funded trader with Tradeify starting today. I bought it for you. You're welcome. This is what I do with my gains. I like to buy you guys stuff and give away stuff just for fun. All right, this is today's winner, and we'll do something else in a little bit. Yuko, type something in chat. Woo! You're today's winner. You're now a 50K funded trader with Tradeify. Hopefully you're not taking a shit. Run into the computer. Ah, I gotta get over there. Wake up, brother. The money gun is extremely oiled today. All right, Neocos, congrats. All right. Cool. You know, it's kind of crazy. So I have such a big community today. I'm feeling good because it's the biggest stream we've had, viewer-wise. You know what I want to do? Just because I'm feeling festive today. How about you guys type in free lifetime in chat? I'm about to give you guys lifetime rocket scooter. One person. Type it in. What? Free lifetime? What? All right, let's go. This is lifetime access to the software forever and ever and ever. Neocoats. You can take a picture of your YouTube account, go to our Discord, go to Constant's channel, message Slacks. He'll give you your code for Tradeify. You must have an account with Tradeify, by the way. You must use our code going forward. More giveaways, more stuff. Congrats, man. You had 50K account with Tradeify. Very cool. Necoats. All right, getting close to my A+ setups over here in S&P, so I'm waiting for that. We like to have fun here. This is a $4,000 thing. Free lifetime rocket scooter. So one of you will now be free lifetime for life. Free boot camp, free software, free access, free community, free everything, free. Just for being here. Like I said, we like to have fun on the stream while we're waiting for setups. I'm gonna spin the wheel in about 10 seconds. Discipline, that's the only way. Somebody asked earlier what was in my juice. I forgot to answer you guys. It's celery, apple, lemon, spinach, kale, and I think that's it. Apple, did I say apple? It's apple lemon, so it's kind of like sour. Apple, lemon, spinach, kale, and celery. It's really good. Okay, ready? I'm gonna spin the wheel, guys. Can I give it to your buddy of mine when you win? We don't usually do transfers like that, but if you're already a member and you've already won lifetime, I trust you guys. I guess. All right, spinning the wheel. Only way. Dude, I love this song so much. Such a banger. Fade away. V. Gabor. Free lifetime. Awesome job. Wow. So, Vigabor, you need to take a picture of your YouTube account, like log into the sidebar or go into your account, take a picture of your ID, your account ID, so we know that's you. Go to Discord. Yeah, wow, congrats, man. Send Slacks a message and he'll hook you up 3 lifetime. Congratulations. All right, we'll do more stuff. By the way, you know I am on live on the TV. And on My Funded TV at 11:30 Central, which is going to be starting up in about an hour and a half. You guys come to that show and watch me there. We give away like 50 accounts every show, I feel like. 25 to 50. It's such a big deal how much they give away over there. So we kind of added it up last month, and we found out that we gave away over 600 and, or was it 800? 600 or 800, somewhere in there, accounts last month. And hopefully we're going to try to get to 1,000 this month. Just give away free prop accounts, give away free stuff, give away boot camp seats. Hopefully be like this really cool thing. But yeah, and also, by the way, if you go to our song submission channel on our Discord, be sure you enter, do your best AI song, troll me, meme me, troll the community, have fun. A good song, a bad song, a funny song, doesn't matter. Write some songs. The songs you're going to have, we're going to give away free lifetime, so songs that we choose. Here's one of our favorites. This is our afternoon opening song. Listen to the lyrics. So sitting here waiting for better A+ setups. This is a song making fun of like trolls and gurus out there. This is a very Rocket Scooter meme themed song. There's a lot of inside jokes on this one. Yeah, like the line of I would spark a blunt, but I got high BP because I have high blood pressure. That's really funny. So you have to like know all the jokes around here. There's too many of them. That's really funny. What's the A+ I'm waiting for? Hedge pressure. In a minute, I'll teach you guys what hedge pressure and all this stuff actually is. And by the way, while you guys are chilling here, make sure that you utilize Rocket Scooter code everywhere you go. The more giveaways the more you use the code, the more we can go out there and get more accounts to give away and stuff. Our partners are very rewarding to us because they're one of the biggest communities on the planet, and we definitely give them a lot of business. We like to return that to you guys. We work with Elite Share Funding. They have the best static account on the planet. My Funded Futures, best end of the day drawdown on the planet. Tradeify, the best straight to funded on the planet. Futures Desk, you go straight to live. They have a straight to live program, which is really cool. Take Profit Trader, that's everybody's favorite. They stopped using Apex. They all use Take Profit now. Daily payouts there. Apex is still cool. Anyways. I'm waiting for A+ setups, so it's going to be much lower than here. Again, I'm not betting the market's selling off or collapsing. I'm waiting to see better conditions to take along. That's an actual quote from me one time, is that I might call a CRB straight and I'll fuck around and make 10K. Those are two things I've said before. I found with this. What's A+? I'm waiting for monthly hedge pressure. So what is monthly hedge pressure? Let me explain to you guys a little bit about Rocket Scooter does. It's a little unique style of trading. We do volume prediction based on options. It's very cool. I trade futures based on volume I can find in options. So as a quickie little lesson, what bull zone and bear zone actually do is that a stock, right? Imagine a bull goes in there and buys 1 million shares of stock, and that's a lot of stock, and there wasn't a seller to that bull. Right, it's funny how the song just breaks down to like sounds like a church song at the end of that, those lyrics, and then it gets all like crazy worshipy at the end. It's very awesome. So these are the songs that you guys are doing for the contest. They're so funny. I think there's one more cool one I'll play while I'm talking. Let me see if I can find it. It's like the one that he wrote, which was, I think it was a T6 song. Now I'm about to teach you guys what hedge pressure actually is. Use code Rocket Scooter. Oh, nice. So there's a cool one there. I met a girl, her name's iDoc. She's got a smile that's quite a shock. The iDoc avocado is his song. Okay, so what it is actually, okay, I won't talk while he's singing because it's distracting. Turn to the right and tell your neighbor you love them. LOL. iDoc brings me avocado toast all the time. This is a song about avocado toast. This is the stuff you guys are doing. I swear to God, y'all are crazy. So, actual toast. Yeah, this is not a sexual thing. Dude, she makes this pretty good avocado toast, though. She actually streamed herself doing it one time. It's very intense. I told her she needs to make a restaurant. It's so good.
I gotta confess, I don't even like avocados, but yours, they're the best. Are you a chef or a wizard? I never knew. Either way, girl, I love all of you.
This is too funny. So my A+ setups, guys, I'm waiting for it just moves down here. There's no trade-off of this yet. Her name is iDoc. So iDoc is one of our mods in here. She's an eye doctor. And so her Twitch channel is called iDoc Talk. So her nickname has just always been iDoc. So that's what we call her. So we don't.
Just feed me that toast.
So you'll see her pop up. She's one of the mods here. EYEDOC. So we all just call her iDoc. But she's a Twitch streamer as well. Just talking about eye stuff and goofing off. Okay, so this is what I use, guys. I'll tell you guys. So say that somebody buys 1 million shares of SPY, right? And there's not a seller to the buyers. And that's a lot. And that means there's a bull there, right? If you buy that much, you're definitely bullish. And so why this is important to understand is that on the other side of that trade is going to be like a market maker, right? A dealer is just providing liquidity. And they're the ones that actually have sold 1 million shares to that person. They're on the other side of that trade. Okay, I'm not going to write a bunch of zeros here or whatever. So you, as the big bull here, let's just put a bull. That's the trader. He's a bull. And then a market maker is the one that's on the other side of the trade. We all understand this, right? They're banks that are providing liquidity to the market. Just because you buy a huge amount, there's not going to be a seller there every time. So the bank has to sell to you. And so when you're engaged in a trade with a bull against a market maker, you're trading against the house. And therefore, this market maker is short against a bull market. They don't want to do that. So let's imagine that they're going to balance their short trade by longing calls. Can't put a plus sign. Oops. Plus sign for calls. So in this particular example, this is just what I'm demonstrating here. Big bull bought a whole lot. Dealer had to sell to them, and then they bought calls to hedge it out. You're short SPY, but you bought SPY calls, then you're actually neutral, right? It's a neutralized trade. So we have an algorithm and a whole army of computers that's able to actually monitor all options order flow and find these options that belong to trades like this. We call them hedging loops. And therefore, if we can find, like, as the orders are coming through, like time and sales, order, our algorithm goes, here we go, market maker. And order, and algorithm goes, ooh, market maker. It's just watching it all day long. We have a whole army of computers doing this. We pop out the market maker calls, then we can find the options that are held by the bull. Or sorry, we can find the bulls themselves. And so we read the options market and reverse engineer where the bulls are in this example. And that's what a bull zone is. It's a trader that's trading against the house when there wasn't a bear trader on the other side. We identified that there's a hedging loop in between that trader and the market. Okay. So the idea is that bull zone is just where there's more bulls than bears against the house. This is a liquidity pocket where the bulls and bears are balanced. So bear zone is where there's more people shorting than there's longing against the house. These are more people longing than shorting against the house, and therefore the middle is liquid. And so because of this, liquid markets don't crash is a major philosophy of what we do. So the market is bullish and selling off. By the end of the day, we're likely to close up in here. So all down in here, I'm willing to long to stay on the bull side. Very rarely does all of Wall Street change its mind in a single day. So this example is that I use bull zone and bear zone to know that you tend to stay in the same area you started in. What's the probability? Well, under ideal conditions, and when this indicator is greater than half, I'll talk about it later, you actually stay in the same bull zone 90% of the time. under ideal conditions, which we do have. This is slightly non-ideal, so still at less than 90, but closer to probably 80%. So majority of days will not break here and keep going because you're not going to have the entirety of Wall Street capitulate and become bearish for no reason on a Tuesday, right? You usually need an event or a catalyst or some kind of major trigger. Today we have hints of a major trigger, a VIX pressure break, but even so, just telling you guys what this is. So down here, bull zone and bear zone are traders that trade against the market maker. So traders of SPY. And again, we translate the futures, and those are my futures pivots. Now let me show you something cool. Market maker for SPY. Now, in that first example, the market maker was the one that bought calls to go with it. Hedge pressure has to do with the second part of the loop, which is a market maker of the options. So the first guy is a market maker of SPY itself. Second guy is market maker of options. They're the ones that actually had to sell those calls to the first market maker. So dealer to dealer transaction. They're engaged in a bet against each other. This guy needs to hedge his call exposure by longing and shorting the underlying itself, thus completing the loop. You were the trader that longed SPY, and through these subsequent chains, we now found a trader that sold SPY, and therefore it's connected all the way back around. The market maker is supposed to find a seller to the buyer. Well, you found one guy hedging against the options. The guy hedging against the options that they sold is right here. This is the maximum gamma exposure of option sellers and the options dealers and the option. Sorry. This is the maximum gamma exposure of market makers of the options writers inside of hedging loops. So what this means is that as you get close to this level, volume mysteriously ramps up, and you're going to get this net sort of like longing pressure that there's more long hedging than short hedging above MHP. And on this side, there's more short hedging than long hedging. It's just like an accelerating wind. And I always draw a fan here to be funny, but a fan is kind of what it is. It's a constant long wind on the market that's just basically market makers balancing their books and balancing their risk. And so as markets fall, the fan is going to sort of push it away from there. And then so I long off of it. It's basically what it is. Is the 10-year over 5% again? Yeah. So this is how you use it. So all that being said, we look for these kind of relationships, and then here's what you get. Under ideal conditions, 90% of days, you stay on the same side of orange that you open on. The market might fall, but then I look for it to sort of hold off of there. And so I long off of this pivot. Under non-ideal conditions, which we have, this is roughly 73%, as I showed you guys the backtest results. So somewhere between 70 and 90%, I'm likely to hold. So it's a really strong pivot. We call this an A+ long. To go confluence with this, I look at a sum of what all the stocks are doing as well. And let's go one step further. This is S&P. S&P is likely to hold if the stocks themselves are all holding their same levels with positive gamma as well. This orange line is a sum of all the stocks doing the same thing. And this being positive means there's more market cap of the stocks doing this than doing that. So I have confluence with the stocks. That's what makes this A setup an A+ setup to go with it. That's how I do it. 90% of days under ideal conditions will hold in a bull zone. We assume 70 under non-ideal, which today we'll call it a non-ideal day because we have some flags here. So this is A+. This is A+. And bull zone also has its confluence with this. This ratio is the confluence that 85% of the stocks are also in a bull zone. Therefore, why would the S&P leave a bull zone with this being so strong? Because of that, this is an A+ long setup right next to this one. They're stacked right on top of each other. And this is monthly options. This is the same hedge pressure, but with weekly options. We separate them because they both have pivots. What's the probability of the blue? 80% of the time ideal. 60% non-ideal. Okay, it's all greater than half. So we have A+, A, and then we call A+, we call this one an A setup. Bear zone to bull zone is one of the strongest plays we do have, which is longing liquidity. That's a whole separate play. Liquidity map shows me this one, and that's this play right here. I long from bear zone top every single time when the stocks are also bullish. So because of that, I've got an A+ setup here. And now you can see all day long, I've got like a rock solid wall of support. All these 80s and 90% are like a brick wall underneath the stock market here. It will take a freaking nuclear explosion to break all of this. So down in here, there's support. The question is, how low do I let it go before I jump in? So right now I'm waiting for market to flush all these levels, and I'm going to probably long off of them. So today, as the volatility is starting to pick up, I tell myself, well, volatility expansion is happening. I might get a clean little rush to my levels. This is the S&P. This is the first one that's going to touch its A+ zones over here. And as I'm looking at SPY just to convert over, you can see that the monthly hedge pressure is roughly 20 points away in the S&P from here. So right at about 86 is that level, which is here. And I have it already ready to go. So today I've got a support at 86, and then I've got that other A+ at 76. I'm going to long here and long there today. That's what I'm doing. And I'm basically, and what's cool about hedge pressure is that it's predictable volume. Every time I get here, there's volume, and whether I'm right or wrong doesn't even matter. But what matters is I'm longing at the right spot. What this has kept me from doing is longing at the wrong spot. Like, you know, I'm not diving into long YOLO that pivot, long YOLO that pivot, even grab that pivot, even chase this move here. I am waiting, and it's going lower and lower and lower and closer to my pivot. So the idea that I know I've got my strong setups here is allowing me to wait. I'm not sitting here bag holding upside down. I'm actually up $2,000 today, and I just wait for my pivots. That's how it works. How'd I come up with the strategy? Years and years of working in general in data mining. So early on, I started researching the CME group and how they control the market on the Globex, and how the tracking algorithms work, how the gapping algorithms work, the IOP, velocity logic, price banding, all of that, margin requirements, CME span. I started reading patents the CME group put out so I can actually decode the Globex and figure out all the autopilot systems on it, how everything works. And I came up with so many trade ideas just by doing that. CME group patents their stuff, like this is what we do on the market. And I was looking at that and saying, I can make trade ideas out of this. This is great. So that took me down a whole path to create a lot of the things like risk intervals, DD bands, yellow lines, red lines, all the stuff you see on my screen come from my research at just reading everything the CME group ever published. This is like engineering nerd level math that likes to read technical papers. And I read hundreds of things, literally hundreds of things over the course of 15 years. And so that started that. And then I had another person in the old community before we even built Rocket Scooter that was an options trader. And he was telling me all about options. He's like, you know, options are great. They have all this information, and options are the math equation that people use to price options based on the probability they expire in the money, using all kind of factors like time and volatility. And I was like, wait, there's an equation that is the math of the supply and demand of the options and gives an adequate price. And he's like, yeah, you know, like options are priced based on Black-Scholes such that at any particular point in price, there's a 50-50 chance that the options buyer and seller have of winning. So no one side has the advantage at all times. The option is repriced based on the probability. And I was like, say that again. He told me all of that. And I was like, so you're telling me this equation, I could use options math to predict volume flow. And that's the first, my brain immediately was listening to what he was saying. And I originally, and that's immediately what I said. I was like, if this math is pricing options based on probability, then I can calculate the hedging against those options based on that same math. And I can predict volume flow based on that probability trying to shift itself back to that neutrality. And he's like, yeah, they peg options on the risk-free rate. And I was like, huh. I think I'm going to break the stock market. How come nobody's done this before? He's like, it's really hard to understand which options mean something. Every options, there's millions of options out there, but I was like, no, I think I can write an equation to pull out options that are meaningful, options that are hedged. I can just tandem watch multiple markets at once and try to find options that are hedged. Those are the ones that have meaning. Those are the ones that we hedged against. And I went to the drawing board and I came up with all these things I'm talking about now. As I heard him saying this, I was immediately, my brain just goes, options are like a packet of valuable information where I can predict volume. And immediately it was like, I can predict volume with this. This is ridiculous. Has nobody doing this? And now I think about, why is nobody doing this? Well, like, pay attention to Twitter. People in the stock market and people that trade are fucking idiots. This is why nobody's done this. I found out recently, like, trolls and weirdos hitting me on Twitter. They don't realize, you know, like, I realize they're talking to these people. These people are fucking morons in this world. There's not smart people day trading on YouTube. There's not smart people out there building shit. There's fucking indicator peddlers, people that, you know, I don't know, got a degree in bullshit. Like, this is why nobody's done this. You don't have math geniuses publishing things on Twitter for you guys to learn. Like, this is, they're out there starting hedge funds and quietly making billions in their basement. Like, this is not, this is not what the people that really, and this is, I was like, well, that does make sense because these people are kind of idiots. So I don't know. That's kind of what I thought. And that's the story I really have, because in all honesty, it was a brainstorm that I was like, if options are continuously trying to shift their pricing mechanism to adjust the probability of both sides have an equal chance of winning based on a fixed risk-free rate, then, or fixed for both sides. And he's like, yeah, and there's put call parity of the options. And he's explaining all that to me. And I'm just like, I could like see the math in my head. And I was like, this is gold. Like, this is solid gold. And then I started creating my first model for hedge pressure, which immediately I thought I could calculate glue of the market. Like, this is where the hedging is balanced, then the market's going to like glue itself to this level, which was hedge pressure. But I found out is that what happened was markets would move to that level, volume would spike up, and I thought the volume would provide liquidity, meaning that you would hit that level and just kind of stay there. Like, I can calculate where the market wanted to go. What we found out was that volume is hedging volume, and it creates a big fight. And the winner is usually a big winner one way or the other. So instead of it being like an attraction, like a glue, it's more like a trampoline. You bounce off of it really hard, and the volume creates counter movement most of the time. And it became like a no-brainer from there just to do it for a couple of years and see how much, you know, the probabilities, and turn out to be very, very good. Yeah, like most of the people on YouTube, somebody said are salespeople. Isn't what Kim Carson does? I've actually been on podcasts with Kim Carson. He's a pretty smart guy. There's very few people out there I'd say are pretty smart. He's one of the few people I've run into that wowed me with the level of his intellect and understanding the market. So, I'm not sure what he's working on these days, but I remember we were both on a podcast together with a couple other people a long time ago. The point is that I'm utilizing the idea that options can provide additional information about the market. Where can I find volume pivots? This is really what the answer is, volume pivots. And so when you touch these monthly hedge pressures, you're going to see volume spikes. So the best part about it is it just kind of tells me where I wait to trade. Long story short, I don't just jump in and trade at random spots. Hedge pressure is predictable, high volume every single time. This is Apple without fail. There's the volume. This is what my brain saw when the person was explaining options to me. I was like, I can predict volume spikes with this math. Huh. The rest is history. And there it is. There's Apple. It's crazy. And I mean, I was having like the, you know, those eureka moments people have. Yeah, it's pretty cool. But I am like a natural code breaker, problem solver, programmer, math guy. I love puzzles. I mean, dude, I've done like 80 escape rooms. I mean, I love figuring stuff out. That's my favorite thing to do in life. I've got a 7-year-old super genius son, same mentality. I have the best time with him because we're always like, you know, he played Nintendo Switch for the first time yesterday. We don't really let him play video games. So when he's been doing so well in school, I was like, I'll let him play Switch for a little bit. We got a Switch too. He played Mario Kart for the first time ever. Hadn't even seen it. He put the 150cc cup up and he's like, I got first place. And I was like, wait, against like, he's like, yeah, all 4. I beat 7 years old. He's like, I beat all of them. I was like, oh, were you, you know, every plays Mario Kart, you know, you have to drift to get a speed boost. He didn't even drift. He just was like, yeah, I figured it out and I beat it. And I'm just like, he's like, what do you? He's like, well, I found like this button, and when you get the blocks, it gives this button. And he's like, I like the blue turtle shells. They're my favorite. And I'm just like, this kid's cool. So like, we have a fun time in life, and we always, you know, I challenge him. I taught him how to play chess. when he was 3. And, you know, it's just our family's the way. My dad's the same way. We've always been like this. And we're just a bunch of math. It's a house full of math nerds, dude. For show. You'd be trading an esports champion at age 2. That's what I'm saying, man. I'm like, I don't think I want him playing more video games, but I was just like, check out Mario Kart. And then he played it for like 20 minutes. And after he beat it, he got bored with it. And I was so excited. I'm like, oh, thank God. I'm like, I didn't want to start a thing where he just wants to play video games all day. He went back to watching people build stuff in Minecraft on YouTube. That's what he likes to watch. But story of my life. That's what kind of led me down the path of creating hedge pressure, was because I wanted to create volume pivots. And how is this useful to traders, right? Well, the idea is that everything looks good. Where do you trade? Where do you play the game at, right? It's really hard to come up with ideas on where to trade from. Monthly hedge pressure, and I like we're here on the side, you can see this thing called a map. I put this up here. This is showing me where pressures can be. Anything below, like essentially these orange and blue are your hedge pressures where you have your pivoting. This is high volume pivoting. This was Tesla. Tesla opened below orange and blue, and therefore it's not bullish. As you see below orange and blue, there is no arrow to long. So therefore I wouldn't long against that not bullish pressure. And it's really neat how cool this worked out, because I can get a good grasp of why the market's doing what it's doing. Now, this didn't interact with any of it yet, but I know that every time you touch these hedge pressures, there's going to be volume. Or when you break it, there's going to be high volume on it, at least relative to itself. As we're playing through the hedge pressures here, there's a little bit of volume. And on the hedge pressure break, there's a little bit of volume as well. They're very important to understanding the state of the market. Now, Meta opened above MHP and broke below. This creates what's called a gamma squeeze, which is unusual selling pressure and unusual volume. There's the unusual volume that comes from that. But then, like I told you guys with S&P, my favorite setup is too long on bear zone back to bull zone. There's very strong support in a liquidity pocket. This is my favorite setup to trade. So it's like while Meta is selling off, it's very unlikely to crash from there. It's going to hold for a while. And this is kind of like finding bottoming pressure in the market. There's Tesla, that same setup there. Right. So in general, SPY, QQQ, futures, all of that, I use the same pressures and I watch all the stocks at the same time. So not only do I know QQQ has very strong volume pivots from here, I can always just wait for them to take off. And here I am, not just playing the chop all day. Wait for good setups, right? Here, SPY, I'm waiting for good setups down here. That's it. So I'm still waiting for the A+. Yeah, like I'm not trying to force a trade. I mean, there's no reason to do so. I'm still waiting for the market to pull back. Resilience, which is an arbitrage indicator, a gap fill predictor, is still negative. So negative res means this is the high. We're having resistance off of half gap. Sorry, there. And outside of the box, this is also resistance, negative res. So it's very likely that we do hit our strong pivots, which I'm excited about. Let's wait for it. Volume is consolidation, typically, right? Low volume is where price really moves. So it seems, so it depends, Jesse, right? So the S&P is going to move for 2 reasons. Number one, it's going to move on its own accord due to volume flow and price imbalances, right? People are going to buy and sell imbalances. Another thing is that the index is going to move just to track the stocks underneath it with no volume. Sometimes the index will move just because the stocks are moving and the pricing adjustment happens very quickly. It doesn't take a lot of volume because the algos are just moving the price around to track the underlying. If there's a big news event, everybody's buying Apple real quick, the S&P will jump even before a big volume move happens, right? It's trying to track the underlying stocks. A good question, good question. Volume just means where do I want to trade from? Let me avoid everything in the middle and only trade from what matters. That's really what I'm looking for. And because I know where volume will be, I'm going to wait for volume pivots. Where are my volume pivots today? Here, here, and here. This volume pivot is resistance for now because the confluence line is negative. This volume pivot is resistance for now because the confluence line is negative. This volume pivot is support because the confluence line is positive. So now I've got shorting pressure from here and longing pressure from here, and we're exactly in the middle, and I kind of don't want to diddle in the middle. That's why I'm waiting to make a decision. Because this indicator was negative, that's why when I took that scalp earlier, I closed at the resistance pivot on that one trade I did make when I grabbed the long there. I'm only up about 2,000 bucks today, but I'm still on a 16-day winning streak, and I'm just waiting for setups. So what's cool about it is it doesn't matter if I'm right or wrong. I'm wrong just as much as you guys are. Trust me. Everyone's wrong and right the market. Nobody can predict this crap. But what I do know is if I long, I'm going to long from right there. Not from here, not from there, not from there, not from there, but here. My efficiency is so good because if I am longing there, I can stop small if I'm wrong. I know if I break this, the small probability it happens, it's devastating to the market. But why would I long here and lose 20 or 30 points before I end up being right, if I'm right? So the philosophy that we have at the Rock Zero team is teaching people that it doesn't matter if you're right or wrong in the stock market. What matters is that you're right or wrong from the right place. I can get the trade right or wrong, equal probability down here as you guys get it right or wrong. Doesn't matter. But the fact that I made the attempt here and not here, 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 here means that I have better entry efficiency, which means my losses are small. My trade time is smaller. I get in here. Right when I get in, I'll know within 10 minutes if I'm wrong, I can get out of the way. I showed my average loss time yesterday on stream. It's 8 minutes. I'm in and out quick when I'm lost. I cut my losses so quick. It really helps me stay profitable. Now imagine that I'm trying to long right here and then I'm waiting all day and waiting all day and I'm upside down. It's grinding my brain and I'm just like hurting. And I'm like, and then I'm in the market for like 2 or 3 hours. All of a sudden Trump tweets something. The longer you're in the market, the higher probability lightning's going to strike and you're standing under a tree, right? So the idea is I can get in and out where it's very efficient. Now this is a B setup to long from here, but we don't have the confluence to do so. So I'm not going to take the small trade long. And what happens if it does rally and I miss out? Well, I ain't missing out on anything. I made 60 grand this month. I'm not missing out on shit. Like trades, there's a million trading opportunities per day. I don't see every little thing that moves around and decide, let me get it on the long. Let me take this. Let me take the short. Which way? I just take high probability setups, and it's very important to do so. And I only trade at the places that matter with good confluence. Now, again, opportunistically, there is a long setup here. It's a B setup. And even though I don't have the confluence, I can long to there. And I can get a nice little 2.5 to 1 setup if I wanted to even risk this in one account. But I can also wait just to see if we dip and get a really strong A+ there. So to demonstrate, maybe I'll just take a losing trade on purpose. How I would dig out of a losing trade. For science, you know what? Let me see. I can long from here and show you what a stop is and show you what happens if I dig down at the bottom. You guys want me to do that? We do have liquidity pockets in some of the bigger stocks though. I'm going to trade it with micros just to demonstrate. I'm going to do just for fun 2 micros. I've already calculated that if I lose 20 points on 2 micros, that's 200 bucks. It's not a lot, right? It's a $200 lesson for you guys. Don't worry, I'm up $190,000. We'll be fine. So I'm going to go take a leak real quick. My 2 micros are probably going to drop, but what's going to happen is if I hit my high pivot, I'll hit it with 2 minis and make it all back. I'll be right back. It's snack time. Oh, let me check on IDOC. At least how she's doing here today. All right. So question you guys have for me or whatever, let me go read the chat. I was kind of going through a little speech there. I'm waiting for the A+, yeah. You already took 20 points, 120 points off the market today. That's awesome, dude. Is there anything, am I anything now? So Jones, if I'm in something, you'll see the top right of the screen will always show it. My DOM never leaves the screen. The main account I'm trading is always here, my first account. And I always tell you guys if I'm in a trade, I'll always let you know. Go over zone tops and bottoms, i.e. meta bounce at the top of zone. Okay, so let me answer the meta question. There is, so the only thing that matters in all of this is, okay, so you have a zone, right? A bear zone and bull zone. The only thing that matters in a bear zone is the top. The bottom, it doesn't mean anything. What we care about is where bears and bulls are split from each other. This is where liquidity is. The closer these are, the more liquid it is. And so we want to know where the bull and bear division is. Just because there's a bear zone top is important, a bull zone bottom is important. Bear zone bottom doesn't mean anything. Bull zone top doesn't mean anything. They're not used for anything. We assume that just the market's still bullish up there. So what we care about are the levels here, and that there's always going to be liquidity because the market tends to want to stay in the same zone it opened, and it takes a whole lot of selling. Like I'm talking about a whole lot of selling to go from a bull to a bear. You have to have everybody basically abandoning their bull position and dumping. And you need a real big reason for that to happen. And so right now, this has created a little bit of selling pressure due to that, you know, that squeeze on that hedge break, but it still fell to a liquidity pocket. And there's a rule of thumb that you'll learn in all the boot camps as well, as that liquid markets just don't crash. They really have a hard time falling. And so while we're in a liquidity pocket, which is what LP means, liquid, the market, while it looks like it's bearish, in reality, you can see how the market is not really selling off. That's what liquidity is, right? There's enough buying pressure there to keep it going. So that's what the different zone boundaries are. My favorite setup is a liquidity pocket. This is my bread and butter. This is the thing that gave me a high win rate even during the market sell-off in March and April, was because you pass through liquidity pockets all the time. I was longing most of those days selling off too because there was a ton of LP trades. Sorry, this is loud. I'm going to eat some chips for breakfast. You can see all of this automatically on Rocket Scooter, right? The link is in the description below. Everything is fully automated. You just click on a ticker. It loads up the pivots, the levels, and the map and shows you the flow and the direction based on the order flow due to hedging. And the tool set is half price for the first month to try it off. You guys can go in the description. I'm the CEO of the company that actually made the trading platform, not just the stuff inside of it. And like we're a team of engineers that decide to build cool stuff for you guys. And so one of the biggest trading communities on the planet. Our Discord has over 10,000 subscribed members inside of it. We've had 100,000 people come through our door and try out our software over the years, and pretty cool. And obviously on YouTube, we got pretty big in the YouTube front. And you know, our commitment to you guys is we're just gonna make cool stuff, and we're gonna show you the details and the data and stuff that goes with it. If you guys like next level analysis and you want to see me backing it up with live trades that I talk about what I do and see the history of my own trading, my results don't obviously guarantee you guys will have any results. I don't ever make promises. You guys are gonna have an uphill battle like any trader, but we will teach you the ropes, and hopefully it's something useful to you and you get something out of it. I do very well as a trader, but because I'm different, I'm built different. I've been doing this for a while. I'm pretty good at what I do. It's not bragging. It's just the fact of life. You're going to have a hard time. Everyone does when they get started. And I sucked for a while when I got started. So don't feel bad if you suck right now. Can I explain the margin buffer limit? How's it calculated? It's 99% total loss value of contract based on the margin requirement from an anchor point in an order imbalance. It's a long story. You got to come to the boot camp. We'll show you how to do it. Think we can see a much lower low today? Probably. I did take a small long bet, just as I always can take a bet on one of these B pivots. NASDAQ is slightly bullish. S&P is not. I tend to trust the S&P as being the bad actor here. NASDAQ is just not selling off. So I just grabbed 2 micros just to have fun with it. Dude, I've been playing Elden Ring Shadow of the Erd Tree, which I kind of got into that series late. The DLC is hard, you guys. I don't know if you guys play Elden Ring, but if y'all played the DLC, it's hard. I like it. Other Dark Souls games are hard in general. Elden Ring's probably one of the easier of the whole series, but dude, those games are all, like, I was watching some videos of them. They're like hard as crap. More questions you guys have? I explain. Jesse says, I like how mine's objectively and algorithmically get salvaged instead of you having to identify levels. But I can't tell where the daily extremes like you can. This comes with practice. How do I backtest this idea? Some data frame. Right. So we've got 5 years of historic data. Support the 90% claims. The low probability bear market. We finally have had a bear market, like our crash market, since we've invented this, to test out the probabilities in the bear market. And of course, we isolated that. And that backtest is here. And this is like 4 months of data of just the sell-off. We want to see how these hold up in just a sell-off crash market. This ended right after, Trump did his reversal play, right? When the market turned bullish again. So this is cataloging all of the bear market. So on the extreme on the bull side, which we had for many years, was roughly 90% here and 80% here. In the bear market, it's roughly 70 and 73% hold rate. So obviously between the two markets, you're going to be somewhere in between the two, effectively. And so, yeah, but 5 years of backtest data. The backtests are done by independent, like, members in the group. It's not just us doing the backtest, and like there's like volunteers who get together, and there's like communities inside our community of just like data types. They like to get in there and analyze this stuff and publish it on their own. That was a member that just decided to publish it. And a lot of these people got into this because they were like very, very intelligent, and he's an engineer. And they're like, I'm going to call bullshit on all of this. And I was like, please do, because I'd like to see what the numbers really are. Like, to get in there and just be like engineers that are skeptical, which they should be, decided to take up the task just to disprove it. And then they came up with the back test, and then they were hooked. They were like, okay, this is good. And so these are people that don't work for the company that actually publish this data, which is kind of neat. Would that be an A+? This is not an A+ because resilience isn't positive, the one that I'm in. It looks like I'm up 50 bucks. So. Somebody called me a clown. That's cool. But this clown got the money. This clown got the girl. This clown got the life. And I didn't have to go to clown school. My day was pretty good. I only made 2K, but I'm all right. Where do I get historical data to backtest? Looking for good deals. For historical data, in general, what kind of data are you looking for? Options data? You're looking for stock data, futures data. Nerd shit equals fun, cool streams. Thank you. Liquidity map is also changing based on the chart. Right. So the levels are frozen every day at the right level, but correct. Like if you fall through some of the levels, it'll jump into a different map. Like this isn't a bull zone. If we jump into here, it'll change to an LP. So it kind of shows you like in every area where the actual pressures are. Correct. To execute on ES or NASDAQ as well, I do both. I trade whichever one looks better. And today NASDAQ is the one that looked better. My initial trade that made $2 grand was here on NASDAQ. So NASDAQ is the one that's still kind of holding the fort, while the S&P is the one that looks a little booty. And just for fun, I was taking a trade. I kind of don't want to be in it. I was hoping to take a losing trade, but it's a winning trade. So I'll pocket my 40 bucks and just wait. Why long here with negative res? Moreau, I answer this question for you every single time. This is for you. I stopped the boot camp for you to answer the same question. Resilience is not a long or short indicator. And I don't know how many times I have to say this so that you get it. Resilience is a pivoting tool from there. If I get to there and resilience is negative, it's resistance. If I get there and resilience is positive, it's support through there. So why long here with negative res? Because res doesn't matter if I long or short. It has nothing to do with long or shorting. I literally said for 20 minutes, do you get this? And you said, I got it. Do you get it this time? Do you understand this time? Please tell me you understand this time. Resilience has nothing to do with whether I long or short. It will never make that decision. Resilience is only a size decision. So because res is negative, I'm going to trade very small. 2 micros. Not 2 minis, 2 micros. No, he's a great student, but I have to make sure he understands. And you guys understand. This is a lesson for everybody. This is not a long or short indicator. Because it's negative, I'm cautioning that this is resistance. It doesn't mean I can't take a long pivot, any pivot I've got. But because it is resistance, it limits my upside movement to maybe there. I'm going to trade it with something very small. If I had the confluence, I can take that trade with 2 minis, right? Hopefully you guys get it. This is a confidence meter in any pivot. I can long anywhere I want. It doesn't matter. This is to help me decide how hard I hit it. These confluences are just how hard I hit it. It's not telling me the direction. DD ratio is greater than half, less than half, resilience up or down. It's just how hard I hit it. That's it. Well, but the thing is, I love Marone. I love the people here in the chat. And make sure you guys understand for your own good. That's why I have to be serious about it. I don't want people get used to in technical analysis is like, the line points down, so market's going down, right? And I get that all the time. These technical analysis, algorithmic guru salesmen selling you guys, you know, shapes and colors and patterns. You get used to seeing down means down and up means up. That's not the case at all. This is an arbitrage meter. It's not a direction indicator. It's a confidence level in what all the stocks are doing. If the stocks are below the dashed line, then even in a bull market, I can long, but I have to bet that the index stays below the dashed line as well. Doesn't mean that I can't still take a long. It just means that my long R&R is limited maybe to there. So my calculation, I can go from 10 to 25. I can maybe get 15 points if I'm lucky with a 10-point stop. But because I don't have the confluence, I'm going to trade it very small. And so my indicator is about sizing, right? It's not about direction. I can long off of any pivot for whatever reason or short off any pivot. The probability that it can come down is high, yes, right? But because I know that, I can just trade very, very small. I was actually trying to get in on a losing trade. That's even what I said earlier. The goal was I want to get in onto a losing trade to explain what happens when I do 2 micros. And if it goes against me, I can get 2 minis right there, right? So I make sure to let you guys know that resilience is not a directional indicator everywhere. It is a tiebreaker only here. When we get to this level, if it's negative, then it's likely to bounce off of it. So as far as I can go up is likely to that level. And this is what I'm just trying to make sure you guys understand that. Y'all get used to technical analysis being arrow points up, market goes up. This is not market goes down or line goes down, market goes down. Line goes down right here means this before was support and this now is resistance. So as you see, the market's kind of trying to hold there. And then once the stocks let go, now it's trying to resist there. It's a polarity shift from that being support or resistance. And so even when this is resistance, it doesn't mean market's going down. It can go down. The likelihood is higher that it can go down. But all I say is even if I long, I'm only longing there. Like if the market bumps up to there and that's negative, you wouldn't be the person to jump in on the long up here. That's the dumb trade. That's the bull trap, right? And so using this to do sizing and risk management is really what that is. A risk management indicator, right? It's different. And make sure you guys understand that. We had that same discussion a couple days ago in the boot camp. So I hope you remember that, Murrow. This is for you, bud. More questions. And 10 AQ long right now. LOL. Yeah. Did I get whipped by Melania? Dude, no. So Melania only beat me 10 times. And it's great because I have a bleed build samurai. And she's really weak to bleed. The hardest boss in the game is Radagon, like the last boss, because you can't do bleed damage on him. And I had to go respec a couple of times, which I had a bunch of larval tears so I can do it. And then once I respect properly, I whooped his butt in the first time. But Melania was pretty hard, I would say. And I think like when people say like which boss was harder in Elden Ring, it's a tie between those two. And I think that Melania mechanically was a harder fight for sure. And like the first So the DLC is the hardest of all the Dark Souls games for you? Dude, that's what I'm like. Even the first boss took me like a first baby boss right out the door. Took me like 20 fights to get the fight down. So DLC is gonna take me a while. Hit through it, but I'm definitely loving Elden Ring. It's fun. Blackstone and US Natural Gas. Thank you for the news, Kung Jong. Do you guys archive past data? We do, yeah. How do I get historical data from us to backtest? We're building a backtest module for you guys. The platform wasn't designed to display historic liquidity maps. You either keep them or keep evidence of them yourselves, or when we do our backtest module, we'll be able to provide you with the historic ones to go with it. So right now, our project is automating all the future side of stuff, and that's going to be done this week. We already had the prototype out, and then after that, we're building this entire backtesting module, so you can actually backtest what's the probability we hold hedge pressure under these conditions over the last 5 years of data, whatever. So, if there's a clown school in Sarasota, Florida, hilarious. Where did I learn from when I was starting out? I learned by myself. There wasn't anything in 2010 other than Barnes & Noble, a few books, and no YouTubers. And it was really hard to learn. And I kind of had to just kind of teach myself. Streaming wasn't a thing back then, right? Do I like Thinkorswim on demand? No, Thinkorswim on demand has been buggy for 20 years, and it's still as buggy as it was when I tried it a long time ago. So the liquidity, we already answered that question. The resilience numbers at the bottom of the charts. How do you get those numbers and what they actually mean? Okay, let me ask the resilience really quick. Resilience is a gap fill predictor. And what we do is, this is a kind of a cool idea I had, is that open and close, we all can agree, right? Yesterday's close and today's open, we can always agree is high volume. Y'all see that, right? High volume. So high volume means high liquid, highly liquid. And in the middle of two liquid spots is very liquid, right? The middle is always extremely liquid. Do I have your attention so far on this one? Before I go forward, make sure we understand there are goals for volume prediction. Moreau, did you get it, bud? Okay, cool. Like, I always want to explain it to you. Remember, resilience is just for position sizing influence, not direction. Okay. Make sure I get it to you, buddy, because I want you to like really like bake that into your head. It's very important. You can trade long or short any direction. Why would I pick long? Well, the market's still bullish. Let's be real. But I don't have a strong signal from here. So therefore, I can long with micros. That's kind of the point. Okay. Liquid, liquid, very liquid. Okay. So the idea is the principle number one is that volume equals liquid. Okay. Number two, volume equals liquid at open and close. Okay. That's premise number one. Postulate number one. Number two, stocks move up to look for sellers. This is a C. Stocks go up to look for sellers. They go down to look for buyers. That makes sense to you guys, right? Stocks go up, look for sellers. Stocks go down, look for buyers. That's exactly why markets are falling, because you're trying to find buyers. Stocks are going up because you're trying to find sellers, right? So back to the first point, 1 + 2 = 3. Volume equals liquid. Well, volume is going to have both buyers and sellers at both places, and also in the middle, right? So number 3 is open, close, and middle. Are places where you can find the other side of the trade. Markets falling to look for buyers. Oh, hey, there's going to probably be some there at yesterday's close. Markets rallying here to look for sellers. Oh, there's probably going to be some there looking for at today's open. All right. So in the middle of the gap, this is SPY, and every stock also has the same thing. Let's pull up an Apple just for fun. Just for funsies. Apple. Okay. Apple has opened here today and closed there yesterday. We all know this as a gap. Apple has gapped up, right? We closed here yesterday. Pre-market, we're there. We gapped up and opened here. Okay, it's just a normal technical gap, right? So let's find one that is in the middle of the box, just for simplicity's sake. Show you guys something cool about it. There's like one that opened and gapped and still in the middle. Let's find a good one. Maybe Tesla is not there now, but maybe worth using Tesla as an example. Okay. Google. Let's just use Google. Okay. Google is better. Okay. Now, Google gapped up and closed there yesterday. Google has volume pivot here and volume pivot there and volume pivot there. We can see it, right? I mean, you can see it at the bottom. There's the opening spot. The market pivoted there, and at the middle and at the top, there's volume spike, right? So you have volume, 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 which means buyers, sellers, buyers, sellers. Now, at the middle, the market is the most liquid, okay? And then we call it the half gap, most liquid. So the idea is that on the first premises I gave you, if market was to go up, the market's looking for sellers. If you're a market maker trying to figure out where the sellers are going to be, where can you guess they will be? Let's ignore hedge pressure for now. Let's pretend this blue line isn't there. And so if Apple and Google and Meta and all these places open and they're all sitting in the middle, then we would agree the market's balanced, right? Liquid market is balanced. And therefore, if every single stock in the S&P was in the middle, then resilience would be sitting at 0. Okay. Next thing is if what happens if Google starts to move this way? Based on the first two premises, markets go up to look for sellers, right? And that the sellers are likely to be here. So what our algorithm does is it uses those two things together and says, ooh, Google has moved up a little bit. So if I were to snap my fingers and find the sellers that it's looking for, Google needs to move this much to get there. Okay, we call this the implied move. And therefore, Google hasn't moved this much yet, but has the potential to move that much. Do we understand this so far? Gapple, that's funny. Implied move. You guys understand that part, right? It moved up, it maybe can keep going that far. And the idea is that because it can go up that far, then our algorithm will tell you, well, the S&P value, SPX, is likely going to also go up some amount because Google went up, and the index is likely to go up as well, some distance. We can calculate. If Google moves up exactly 50 cents, then the SPY is going to go up exactly 20 cents. I'm making up a number, but we know how much the SPY needs to go up, and we call that the SP implied move as well. And so we compare the value of all of the stocks at once doing the same thing from the middle. We might say in the middle, looking at all of them at once, we do a balancing act. What if, Apple was here, Amazon was here, Meta was there, and then what if Google was there and JP Morgan was there? Some of them have bullish implied moves to fill the gap. Some of them have bearish implied moves to fill the gap, looking for buyers, and there's looking for sellers. Then we market cap weight all the implied moves and sum them all up, and we find the implied move of the S&P. Therefore, we convert it to the implied move of the SPY. What's the SPY value going to be if all these stocks were to finish their moves? It's designed to be a leading indicator. And so we compare the actual current value of SPY to the implied value of SPY. And if this is lagging behind a possible upward movement, the resilience will be positive by a degree. If this is priced too high and the implied move is supposed to go lower, the resilience will be negative. It's a leading indicator to predict the gap fill on SPY, which means futures. So with resilience being negative, the probability that we go to there is likely not to happen. S&P is likely to track the sum of the stocks, and what it ended up being is the perfect pivoting agent from here. Because this moment in time, the majority of the market cap has shifted to here in the stocks from this moment in time, this line turned to resistance. And before it, it was support. And we can see a very clear night and day difference in the movement of the market. Trying to hold, trying to hold, trying to hold. We lost the last bit of stocks here. And then all of a sudden, this is now resistance. Now the SPY is comfortable down in here rather than here. That's all it is. So the idea was, because it uses the implied move philosophy, therefore it's betting on something that hasn't happened yet. Therefore, it's a leading indicator by design. It's not just watching price action or advanced decline or market internal sort of thing. It's actually doing that full calculation and anticipating the movement of something that hasn't happened yet. And therefore it makes it a leading indicator. And people have written songs in our AI contest that says resilience is never wrong. Because it's not. It's just a display of what's actually happening. NASDAQ, the majority of NASDAQ market cap is actually on the top side of their box. So NASDAQ is likely to also follow suit. And when I load up QQQ, as you see, NASDAQ is up here. This is support because NASDAQ resilience, white number is greater than 0. Pretty cool, right? How to calculate the limits of the implied move? It's just inside the box, GR. Great question. It's inside the box. So resilience is an indicator that I'm very proud of, and it's one of the ones, like most of our stuff is secret sauce, but resilience is something I invented, and I just told you how to build it. So, you know, this is one I actually do publish to the world and tell people how it works, just to show off how cool it is. I'm very proud of it. So an example, any stock inside the box, the implied move is the distance to either the open if you're above, or it's the distance to the close if you're below. If you're outside the box, you're not, there's no implied move. The implied move has been achieved. You get open and close price. It's just your open and close price. Yeah, pretty cool, right? So the idea is that if you were to snap your fingers and every stock were to simultaneously fill their gap, if it's moving up, it's trying to find sellers. It's going to go higher. If it's moving down, it's going to try to find buyers. If the market was perfectly balanced and liquid, it would stay in the middle. That was kind of the idea. So if the stock is drifting higher, then its potential is to go there. So at any given time, resilience is calculating that potential move and telling you if the S&P is leading or lagging behind it. It's an arbitrage indicator. So currently right now, QQQ is very positive, which means QQQ is lagging behind stocks that are moving up. So QQQ is likely to support the halfway point, which it has been all morning, and SPY is the other way, right? Once it went negative here, what was support now became resistance in SPY, right? So again, this is like the techniques, the stuff we come up with is probably, hopefully you'll see a little next level. It's different than what most people think of. It's not just price goes down, market goes down. We don't care about that kind of stuff. What we care about is which side of the fence right here is Google on. This is the important part. This is where it's very liquid, by the way. And you'll see that resilience gets very sensitive at the halfway point. I could bet you right here, because it's choppy in S&P and choppy in NASDAQ, that right about, I don't know, 9:53 in the morning, we probably had one of the bigger stocks push through the halfway point. Let's check. Maybe NVIDIA. No, it wasn't NVIDIA. Maybe Apple. Maybe not Apple, but something, right? Something happened there. Let's see if there's a stock. There we go. We found it. Amazon. Watch this. It's so sensitive to the polarity shift of half gap. Resilience responds very rapidly to Amazon flip-flopping one side or the other, right? That's how cool it is, right? So because it happened in both, it's one of the Mag 7 for sure. And this is kind of what you're looking at, right? The minute that Amazon tilts lower, resilience dove a whole lot to let you know, ooh, that's not good. But on the NASDAQ, it wasn't enough market cap compared to everything else because everything else was doing fine. So resilience is actually designed to be very sensitive here and not sensitive here. As you see, Amazon just moving very slightly through the middle caused big moves in this indicator. Amazon rallying through there, the indicator is actually still going down. It doesn't care about direction. This is what makes it different than like tick or trend or any of those market internals indicators, because it's all watching direction. This is watching polarity, plus or minus. Pretty cool, right? I get along. Let's take a look. What do we got? Oh, hello, baby. And I got 20 minutes. I got to go on My Funded TV, you guys. So I'm going to jump in on the trade maybe in a little bit. I have to jump on a new show. Without losing the flow, can I look at the market and comment, please? Oh, it's the same setup as earlier today. I'm along right here. What's up? Been waiting all day for it. Somebody said, you realize how gold these tips are? We'll appreciate it. So our goal with indicators is not to make your traditional stuff. It's to be a little extra clever. As the meme goes, you know, everything else, all the algorithmic salesmen, the indicator salesmen, and all the junky salesmen just popping out, you know, trending price-based indicators that don't have any logic built into them. They're the scooter, and we are the rocket on the baby. Scooters for babies. It's for little kids. And rocket spaceship. All the losers out there, they're the scooter, and we're the rocket. That's the name is implying that we built on top of kids' toys, which is what most of that shapes, colors, and crayons you guys have been using to trade with. LOL. And instead, we're building a rocket ship. A little bit different. And that's a little... market looking solid here. Let's see what Nasdaq is doing. The open is lower than yesterday's close. Does that change the use of resilience? No, a good question. The box is the box, whether it's open or close or open. Great question. It doesn't matter whether you gapped up or gap down, how you use resilience. It's the same. It's the edge of the box. Good question, Vol. Good question. Appreciate all the free education. Yeah, no problem, man. I love doing this. If this level's not achieved, it'll be the same for the Asian session. No, these reset at market close. We'll have different indicators later. You love crayon. You love the crayon taste, especially the blue one. The blue one is the best tasting crayon. I'm not gonna lie. Tastes better with the wrapper on too. If you really want some extra flavor. Nasdaq doesn't have a pivot nearby. Nasdaq is sort of like the flat one. I'm gonna use S&P as my guide for where I want to enter today. Why do candles look like low volume candles on the platform? Because we only buy reference data. That way you can have it cheap. The platform is just designed for you to see where price is relative to that to calculate the map. In reality, the full evolution of our platform is to draw all of that on the futures chart for you. We originally bought 100% of the market volume in equities to have essentially all the exchanges. And now we just buy 5% of the volume, just enough to show a framework of the candles, but not the full candles. And the reason for that is that the platform, we went for a more affordable version of the tools rather than charging you guys an arm and a leg for the bigger infrastructure to do real-time equities and real-time everything. Down the road, I'm sure we'll be a company massive enough to want to take on that overhead. But once we were, for about half a year, we did do 100% of the market volume. It was very expensive for our members and for our platform. And also it was very taxing on the platform itself because we had our infrastructure designed for that much throughput. And we rolled it back to the lower candle volume, which is essentially just some of the exchanges and all of them. But reality, we don't use equities. We're not stock traders here, so it doesn't matter. It's just reference data. So it will look like wiry, like it's missing data, but trust me, it's updating. You need to buy this data to be able to power all your indicators, which is all it's doing is the last bid and offer. But the historic candles, we're only getting a couple exchanges. So that's how we're able to get the platform to $150 a month rather than $500 a month, right? To build bigger infrastructure for stuff. But futures is real-time candles, right? So that's the whole point. Down the road, everything's gonna be converted to futures, which is about to be done in about a week. Where do you enter a discount code on my funded futures? Oh, you figured it out? Okay, cool. How useful is VWAP? It's not bad. VWAP is more like a self-fulfilling thing. Anything that consolidates, an average is going to catch up to it. VWAP's not a bad place to long from or short from. It's a pivot, right? You just need good, you can trade off of any pivot. You just need good risk management. So as far as predictability, VWAP is a great place to frame an entry. It's not predictable though. It's not like VWAP means bounce or no bounce. It just means that you've isolated a good spot to trade from. But usually with VWAP, a lot of times you're just trading from a consolidation and therefore you're betting on a breakout. Very often in consolidations, I'm not making a trade. It doesn't mean it's a bad idea. VWAP is a very successful strategy for a lot of people. but you must make sure that you are using proper risk management. The VWAP has no predictability on the market. It doesn't mean it's going to go up, going to go down, but it's a great place to prove consolidation. That's the way I see it. And therefore, as you're consolidating, you know, this is where you can bet on a break, which isn't a bad idea one way or the other. But VWAP won't ever, in my opinion, won't ever tell you you should long, you should short. And it's no power there. It's just telling you, here's a good place to guess from. And then you just use other things to pick where you go. How do you, which way do you go, long or short? And so you have to use something else. Yeah. So a lot of people kind of like use certain indicators to predict direction, but not every indicator is good at doing that. Some indicators are just good at telling you, let's take a bet from here. And then you have to use something else to say, well, should I long or short from here? But from here is just as important as long or short. Making sure you're betting from the right place is very important to a trader. The right place is definitely here and here and here. These are good places to trade from, but which way, long or short? Well, these other tools, right? And the VWAP is one of those ones that helps you pick where you trade from, but it's not going to be picking a bias for you, right? Is this about probabilities and predictability because things are out of control? You nailed it. Trading's, my style of trading is purely statistical based. I've got probabilities that things work. I just survive long enough for them to work. You're right. Probabilistic traders are using stats to trade with. All you have to do is not, you go on a small losing streak, then you just don't blow up. And over time, hopefully the stats play out. And then over time, you should be okay as long as you survive long enough for the stats to realize, right? Law of large numbers. How are monthly hedge trips and hedge trips are calculated? We have a filtration process that extract in the real-time options flow market maker options information. We calculate the likelihood of an option being market maker. It's a whole algorithm that does that. There's no determination that this is market maker option or not. We have to mathematically determine it with an estimate. Then we take all the market maker options and then we find the maximum gamma exposure of just those options balanced for now. And then we give you the level where the maximum order flow should be for delta hedging. It's adjusted by all the higher order Greeks and everything. And that's it. Identify day-to-day bias. I have an indicator. I have 3 indicators called greater market. And in greater market, very simple. Number 1 is this indicator right here. This ratio, if it's greater than half, it means more than half the market cap in the S&P is in a bull zone. It's currently 85%. So 85% of the stocks in the S&P 500 are bullish. That's bullish if we're there. Number 2 is if S&P itself is gamma positive on the monthly, called SPY, greater than monthly hedge pressure, then it's getting its own long hedging. So this is a month scale. This is kind of like the now indicator. This is kind of like the 1 month out. And so currently SPY is above there, check. 2 of the 3 are bullish. Last thing is I have a tool called monthly maps, which can look 3 months in the future of the options landscape. And the monthly maps will tell me if market is 3 months bullish or bearish. It's very simple to find that. So basically it's this orange line, green number, and this little button right here. That's it. And in 3 seconds, I've got my bias. If we're in a dark gray, we're bullish. As long as that dark gray is kind of getting deeper in the pocket as time goes by, we're bullish through September. So all 3 of the indicators are bullish, therefore I'm bullish. All 3 of the indicators have been bullish since April, and I have been bullish since April. The same merits. And that's it. And if only one of those 3 indicators are bullish, I'm also bullish. That's how strong they are. It takes all 3 to be bearish for me to be a bear. And right now, none of them are bearish. So market's selling off in a bull market, great. I'm going to wait for some bull dips to buy. And the one day that I'm wrong and I lose 10 or 15K in a day, then I'm wrong that day. But I'm going to take the bull trade every time because all my bias indicators are bullish. Hopefully that makes sense. Andrew? Yeah. Andrew? No, of course, man. Now, how we calculate market maker option stuff is obviously our proprietary sauce. It's a very complicated process. But at least I tell you guys kind of the framework of what it's doing. Gamma exposure means volume. for hedging. Like highest gamma means highest delta hedging, which means highest volume flow. And that's kind of what we're trying to look for here. Hold on. Or they're texting me. Ooh. The My Funded Futures group text, they're talking about doing some cool stuff. I was catching up with those guys, which meaning, oh, I got to get over there to the show. It is time, ladies and gentlemen. As you know, as always, I star on My Funded TV's Lunch Money with Matt. It's my own hosted segment on My Funded Futures TV. As you guys know, I'm a traveling streamer. So everybody go here really quick. Go here, join me there, and then we'll come right back after this hour segment. Just when I say you want to be here, the link is in chat. These guys give away like 25 to 50 accounts and resets on the stream every single hour. So be there. It'll be awesome. Then we'll come back over here after that, okay? Yeah, we'll see you guys over at My Funded TV. Okay. Later.
Market spinning in chaotic haze. Rocket scooter blast through the maze. Volume prediction shows the way. Leave the doubt and the fray.